right, adjust your volume. It is July 17th. Guten Morgen. Aloha. We're going to be streaming stocks, options, and futures trading today. Sub up, like up, comment down. Happy money sticks around. We'll be watching some TA, watching the SPY, watching GME, barbecue. We've got Fubo. Do you guys remember Jamia? Remember this one? You might get a play on that. Good morning. Thank you guys for joining. Thanks you for the support. You have a Twitter you can follow us on also. It's at Happy Money YT. And we have a Discord server that I will link in the chat and pin it if you're not on there. Join us. It's 10 after 9. Got about 20 minutes till open. There's our Discord. Thank you guys for your support. Early morning likes, pre-market likes are oh so sweet. Got 7 of them. Well done. So we did get PC data this morning. Or sorry, PPI. Yeah, PPI. And initial jobless claims. Market sending up basically where it was. But that is on a gap up of 0.38%. So, yeah. Breakout. Engaged. Probably be looking for long entries today. And we'll see. Might hold some futures overnight. I like to swing trade the futures, but yeah, they don't have margin to do other stuff, so that's why I haven't been. We do have this RSI divergence that is still here though. So, and we might even be setting up a third one. It's possible this is a false breakout. It's very possible still. Yeah. Interesting. Good morning, Bruce B. New York Power, they're testing Mullen Campus EV today. Really? Is that the reason for the gap up on Mullen? 12%? That's pretty funny. GameStop's flat. I don't know what barbecue's at. Barbecue's pretty much flat. Looks like the Carvana play's working out. It's down 6%. Probably just close that out today. TBLT, pretty much flat. Morning, Russ. Ryan Cohen being on the interested parties list from yesterday. He was on the interested parties list on a new docket from yesterday. Guess I didn't hear that part. So we've seen him as an interested party on different filings. He just hasn't come off as an interested party, I guess you're saying. Haven't heard much about that. Tell me about it. I think I'm out of day trades on that account. I have day trades on that account. I think I might just be playing with the futures today. Oh, I have one on E-Trade. Nice. So if the opportunity arises, I will be doing some daily buy plays. I think I want some Jamia. It just reminded me of it seeing Fubo. I remember watching this guy years ago when Jamia and Fubo and everything used to rally, GME used to rally. He had like huge positions in these. Crazy. But yeah, this one looks all right. Fubo looks good too. It's just pretty extended. Didn't get it on the break. It's okay. We watched it. I mentally traded it successfully. Beyond Meat. I cut a little early. Nice breakout on it yesterday though. Look at that volume. I mean, these could have big rallies. I'll get a couple months on them. 2-3 months. No, tell me about it, Russ. I know I've seen Ryan Cohen on the dockets as an interested party. Was there one that came out last night that he was on also? Came out yesterday. I didn't see it, but I guess I don't have any new thoughts. I'm not expecting him to stop showing up on dockets where interested parties would show up, I suppose. We've already seen him on there. That doesn't, to me, that's not conclusive that he is going to buy any bit of this bankrupt company. And even if he were, conclusive that we would make money on it. But it does make you question. It was up 5% pre-market. Brad's up 1.2. Here you go, Nag. Just checking to see if I have any big gappers on my plays. Doesn't look like it. I have 2.5 strike puts on Rivian. Whee! I don't know if I have enough time. I only have 190 days for that. Druzy Holdings. Snail, I remember that one. I traded that IPO. Snail's up 31%. JZXN. Yeah, Chinese IPO. I can remember this one too. Up 72%. Chinese stocks are waking up. Mullen's up 13%. About 9 minutes to go. Is that why Mullen's rallying? I didn't cut my losses on that one quick enough. Yeah, it must be. I was looking back at it. Held for too long. Should have cut on this break right here. Just happened in extended hours, so during the day I'm just like, oh, but yeah, should have cut on the break of this double bottom that failed. Once it was here, I was thinking, oh, the next one last fib level, all we have to go, and then it broke through that, and that's why I wanted to sell. It's a good question to ask yourself, Russ. Morning, Al. How's Intel doing? 1% up. Respecting the trend. Morning, Mo Lava. Rana's down 7. Eyes up 0.4. Yeah, we'll see. If barbecue does break 30 cents, probably be adding or getting back in. We had this the other day where it broke and then failed, but that's just because of the court hearing. So, if court hearing hadn't happened, I think this would have been a great entry, a break on this trend. But the way it's been, awful news and a huge sell-off is the best time to buy. So Disney's Iger hints at strategic partner for ESPN. Possible sale for linear TV assets. Alright, got about 5 minutes to open here. Okay. Morning AM. We've got earnings season upon us. SPY ripping up there into open. Pre-bell. Here we go. I don't think you're gonna get a pre-bell. Nope. New high though there on SPY. Ubo's up 5%. Beyond Meat's up 2. If these bank earnings turn the market around. Thank you guys for your pre-market likes. 13 already. Coming into the bell. Appreciate it. Barbecue's kind of exciting because it doesn't trade pre-market. I mean it does, but it like doesn't really. So it's like the good old days, no extended hours. So wait till the bell. Wait till it actually opened and closed. So Mullen gapped up 12%. SPY gapped up 0.4%. Barbecue 29.88. Looking for a break. Some of these levels. Potentially go long. Long today, close tomorrow. I don't know. Hold over the weekend. Snails up 30%. DFLI's up 9. APDN up 7. Ubo. Tears up 3. Buys coming down a little bit. Urbana's down 8. Brad's up 0.5%. I just wicked back up. Good morning, Christopher. New high of the day there. GME is up 0.5%. Genrac's up 1%. Barbecue just hanging out there. This is, I mean, this is a kind of a breakout level, so. Rip. Rip rip on SPY. Plug power's up 4.5. One's up 7. Jumia. Plus 1.8. Pretty wide spreads on this call credit spread, I think. On Carvana, yeah, because they just added all those strikes. I haven't ordered to close it. It says it's up 81%. I don't think I'm gonna get that. Dancing all over the place. New high of the day. Another new high on the SPY. Still going. If it's all. Getting wound pretty tight down here. There's 30 cents on barbecue. Oh. Looks like you might be breaking that 30 cents. Hit 30.40 for a second. Couple sales at 30.39. $30.38, it's up 2.5. There's 4%. It's trying. Shopify's up 4.25. What do we move for Shop? Lug's up 6 now. Spy's ripping. Rubo's up 4.3. Lyft is flat. I think I can roll my short calls on Generac now. See. Yeah, now it's not as favorable. Dang it. VWAP's pretty high on SPY today. %6 unplugged power. Fisker's up 5. 5 staying strong. Barbecues above 30 cents. Positive 1.5%. 30.13. Yeah, I guess Mullen had news about them doing something in New York. Test driving a van or something. Morning, J Souls. Wolf. Wolf. Terra Wolf. He's ready for a push. I think it's had a push, Grumpkin. Push through that resistance. That is neat. Could be ready to come back down and test some supports. Little head and shoulders here. Got an engulfing candle on the hourly. Broken out of this upward trend. Maybe a little pullback before more ups. Yeah, even the daily has an engulfing candle yesterday. Good morning from Pierre and Maui Sam. Good morning. 30.40. Up 2.5% on barbecue. Top still 5.25. Asana's up 4. One kind of gave back some of its gains. GME up 2%. X down now. Engulfing candle on Macy's. RSI divergence. Like the day I got them, they're up like 40%. They should just close then. Snails up 32%. Good morning, Guts. You got in Carvana? I have a short on Carvana. Trying to close it. If I get filled. The boat is called PS off. The GTI and finger basket. Oh, really? Looks like it's due for a little pullback. Wolf. Same with Carvana. Bubo 6%. Up is up 6%. Morning, Guts. Barbecue now red, 29.44. Pizza party tomorrow? Pizza party. It is Friday. Employment numbers? We had that this morning. Initial jobless claims and then PPI both came out at 8:30. So the forecast was 250,000. Came in at 237,000. The jobless claims. PPI forecast was 0.2%, came in at 0.1. Or PPI forecast was 0.1, came in at 0.1. Okay, I got out of my Macy's calls. I still like the chart, sort of, but I don't know if I have enough time. I think it might settle down for a bit. I don't think there's anything new on barbecue. I guess there were some filings last night that had RC as interested parties still on it. I don't know. Morning, Tasty. Yeah, now I can't roll this short call Generac for the any premium. Sucks. Will I buy Carvana? I don't know. I liked how it was getting to the top of the options chain. It's had a massive move. Maybe though. Maybe at like 30 bucks it starts to show some signs of support. I don't know if it's got another leg in her or not. I mean, it's had a massive rally. It's had a short squeeze really. They need to offer shares is probably what they need to do. I'm not so much at levels, I'm more about, I guess, the momentum. So levels, and then combine that with bullish formations, signifying that that's an actual level. But yeah, the 5s and 10s are usually, you know, psychological levels, and this one is that way. 30 bucks is probably the major psychological level and prior resistance. 30 bucks anywhere down to like 26. To 20. I'm not sure it's gonna go again. I mean, it might on its way down, you know, come down and have spikes, but as far as making a new high, I don't know yet. Market could be making a big turn down with these earnings the next couple weeks. Little bull flag there on SPY. Up's up 7. Fubo's up 5. Yeah, it's not want to give me credit at all to roll up anymore. Generac. Messed up. Too high there on SPY. Inputs here. J Souls. Patience. Could just be choppy for a bit. Take time for it to turn around. Unless, I mean, I don't know your plan, your trading strategy. You could have taken him there and you could sell him here at VWAP. Plug is rallying. 8.5. So it'll break out on plug. Could be building little head and shoulders here on SPY. But we're still in a uptrend. Carvana's had a pretty good bounce this morning. I just close my Generac position. I'm not able to really roll this up. ready to break 40s? Yeah, this is your first little resistance here. 38.50 or so. Then 40. See if it retests that. Looks like it might. Oh, a nice little trend up. Wheels up almost 10%. Hopping. Barbecue 30 cents even. Redfin's up 10. Whew. Thing is squeezing. Tops. Rally, you still in tops? Wasn't you that was in tops? Bupo 6%. Mullen 6. APDN up 30. Ripping. Not volume today on it. What? A big pre-market pump too. Requires RNA polymerase developer Spindle Biotech for 600,000 cash. Files for mixed shelf, that was months ago. GME is up 1.8. Just burning what's left of the little bit of theta. Small amount of IV on those contracts. Slow burn. AMC's up half. Barbecue 29.88. What's Troop doing? Troop with a 3% bounce. Open a little more of a sell-off to get back in. Our side divergence there also. Snaps up 3%. This one got away without me. UPS looks nice. Macy's is now green. Great. Beyond's down 1%. I come in through VWAP, maybe. Maybe. Might grab some more Beyond. Too early. Friday's up 1 1/4. SPY's coming down a little bit. Rocket Lab is rocketing 10%. Tops is up 7, Affirm 6. I have an order for a starter position on Beyond. We'll see if it gets filled. Not trying to overpay. The IV is pretty high on it. It's pretty jacked. And SPY wicked right back up. GME up 1.3. All in now 7%. Burns up 6. Okay, close out of my Generac. Might reload at some point. Maybe on a retest. We get it? I was max profit on it, so basically only downhill. Thanks for the play, Al. That one worked. See if Zoom breaks out. Might be getting back into Zoom. Teladoc, not bad, 2.5. Brad, 1.5. Egg, 1.7. Well, those woke up. Discord bots calling you? Really? Actually calling you? That's hilarious. You should talk to him. See what he has to offer. You got out of top now? Lord? I don't see any bots in the server. But yeah. Very well could be an impersonator. I'll search it here. Ah, little head and shoulders maybe forming there. Let's see. Yeah, I don't see any happy impersonators at this point in the server, but doesn't mean they can't have Discord and message you. $29.60 on barbecue. Setting up the living room. This is the way. TBLT. Jeff Burns up 2%. Firm 7, Redfin almost 10. GME up 1.5. So far I've been doing consolidating. Yeah, the Ivy is really high on RXRX. Surprise, surprise. We go up 7.5. Jeez. Beyond Meat. Pretty overvalued, man. That said, I'm looking for a long. Still nothing on barbecue on I borrow. Check what Beyond is doing. Yeah, Beyond Meat has a high borrow fee. I think this thing could keep going. 72%. Risky. Too soon on Beyond. Too soon, Junior. Nirvana down 7. Ups up 2.5. Snaps up 3.5. SoFi's down 2. Whoa. Peloton 1%. Run up 2%. Dish is down 1%. Slowly melting down here. Got a little head and shoulders up here. I think it's breaking the neckline now. Maybe. Very, very slowly. Lift is kind of selling off. Don't do it, lift. Here comes SPY. If we get kind of an inverse cup here on the day. Then maybe a handle on a gap fill. A little bounce there on SPY on that pre-market high. Okay, safe's up 3.5. This chart still looks nice. Options aren't too liquid. $29.54 on barbecue. Down 0.5%. Okay, let me see. Space is up 3%. A nice bounce off of that support. Look at that. Little sketchy theta farming coming up into earnings. So I anticipate more often than not, stocks might, the market is in favor. Stocks could sometimes rally into earnings. However, do my best to close any short options before earnings. It's coming down 1.5%. We'll bounce around SPY. Pre-market high. Up is up 17% now. Tops is up 10%. Barbecue's flat. Confluence up 2.3. Me's up 1.9. SPY next couple months. Well, the CPI was pretty bullish. That could have been priced in though with this exuberant rally we've had the last couple months. PPI was pretty bullish. Now we have earnings. So there's not a whole lot of market data for a couple months. So it'll really just depend on earnings. We're at a breakout level. We've broken out, but could be a false breakout. Almost too early to tell. The only thing we've had above the breakout is this red small bodied candle. And we also have RSI divergence back here. And maybe setting another one up here today. So those are bearish. I don't think we'll hang out where we are necessarily right now. That helps at all. I think if we find any kind of support here, we're gonna keep ripping. I don't know though. It's really too early to tell for me. Because we had the cup, the handle, it broke out, but it's very weak so far up in this area. So if it finds some strength here, then I think we keep rallying. But I still kind of probably swing a little more bearish. So if we do break down though, earnings are bad. I think we could be much lower. I don't think the market has any place being up here. So at some point I do think we're going to reverse and make new lows, break this October low. Do we start heading down the next few months? Could be, probably. I don't know when they're going to flip it. And the charts aren't, it's not too clear right now. But you do have that RSI divergence, which is bearish. And this breakout could be false, but we are in a breakout, so I'm not counting on a drop at this point yet. Too soon for that. Look at the SPY's chop. Okay, close out of my Carvana short. That's all I wanted. I was up 60% on it or whatever from yesterday. Another high of the day test here on Le SPY. Eisen up 17%. Nikola up 18%. Up out of nowhere. Nikola to buy hydrogen and transport trailers from Biotech. Is that the news, I guess? Nikola and Biotech partner to advance zero-emission hydrogen delivery. Boy, Heisen's up also. Chop, chop, chop. I forgot where the support with lift would be. Could be anywhere. 1125 all the way down to like 1085 maybe. Yeah, like 1085, that was the support back here. Let's see. All right, 10:45. Let's see, it gives us 45 minutes till EU closes. We're at 28 likes on the stream. Thank you guys. Barbecue flat, spies chopping around. Slow Thursday. Had a lot of action yesterday, day before. Today we chill. For now. We'll see. Do have a gap down here. See if there's any divergences yet. Yeah, we could be setting up a divergence too on the hourly. So some gaps might be getting filled. Even if we do kind of break out and continue to rally, I think it's going to have at least a retest 443 area and maybe even a gap fill. So seems like the market's definitely waiting on earnings. For now, 11% on tops. $20 on Nikola. Nikola. Nikola's such a joke, man. Like, they picked the first name of Tesla. Oh my gosh, I'd like forgotten that for a bit. Remember when I first heard them come out, I was like, are you kidding me? Hey, they've held out pretty good. Held out pretty long. Ripping, by the way, 22%. Chennai. Hey. Chennai.
Even relatively speaking, they're down almost 60% off their 52-week highs, let alone all-time highs, which is a completely different story. So like you said, the valuation in this name, I think, is fascinating, just given the absolute reset we've seen, and still down off the 52-week highs by 60%. That's ridiculous to me.
Yeah. All right. Well, I will say it's so.
Fingers down 10.
The price target they put on $19. This is a big move for a price target. You know, change of $3 from 16 when it's been trading between
That's up
$16
6.8.
and $20. So you get an analyst move the price target up, and it just goes directly to the price target. You know, in a hurry. So certainly pretty swingy stock still. Fun one to keep an eye on though. Appreciate it, Jenny Horn. Thank you very much.
All firm.
Gen Investing. Futures were strong this morning. Equities have been since the open. Got a
Up
little
7%.
bit of a pause in the NASDAQ strength, but the Russell has been participating this morning. Nick Theodorakis and Michael McCurr joining me. So, Nick, kind of start us off here. I mean, we're pretty much done for data for the week. Seems like CPI was the main event, and it went well.
Yeah, and a little bit of confirmation by producer price index as well, right? Nowhere near as big of a market mover, but certainly nothing to sort of slow the rally in some of these other cyclical names. And you saw a little bit of a continued downward trend there. So I think the story to me, Oliver, just kind of continues to be progress, but slowly. And I think it's all right now confirming what the Fed is saying. I heard some commentary yesterday that I tend to agree with, that nobody thought that the sort of soft landing scenario could come to be. And now, because it feels like we're in this little bit of a sweet spot and everybody thinks that's the case, I'm becoming more skeptical that it can maintain that, right? I think that's sort of the thing when the norm becomes, when the norm changes and the norm mentality changes, I think there's often chance for volatility and a bit of a breakout there. So I hope the trend continues. You're hearing quite a bit of commentary about this being a lower blip, CPI and PPI, and this could continue back higher. And I think the Fed, personally, for the first time in really a long time, has the right stance, which is we've really elevated rates very quickly, and we're waiting to see how that flows through the marketplace. They've got sort of the hawkish pause worked, right? We've got equity rally happening. We've got bonds higher. We've got rates coming down a bit. And then you're in the situation where the market's also pricing in like an 85% chance that they're going to raise again next, at the end of the month here. So I think that they have to be patting themselves on the back, in terms of their messaging at least. And then we'll learn, when they meet in a couple of weeks, and what that actually looks like in terms of commentary around the current rates, and assuming they raise a quarter, what they say about the next meeting, I think will be extremely important. So so far kind of continues to confirm on the week, and all fits the narrative quite well.
True. The technicals, how do they fit with the fundamentals, Mike?
Well, you and I have been talking about the technicals long before.
Sorry.
I think most of the people have realized that the technicals in the S&P have been.
Okay, have been. Well, I guess we lost him. Wow. Mike just leaves us after pulling up the most complicated chart I've seen in months. But here's what we know, is that Mike's been telling us, Nick, for now the better part of the year.
Smoked some weed today.
Since we came into this year, that the
You got a little
technicals are
high.
supportive. And
You won't get high?
we're looking for the participation that is kind of being the holdout for bears. Now they don't really have that anymore, right? Because Russell kind of broke out of this range yesterday, and we get followed through today.
You can tell his eyes.
Yeah,
He says a lot less ums.
Well, the Fed warning
He's more
about,
chill. Talk
banks
slower.
more broadly, Oliver,
A little more witty.
and then not formally, right? But I think having Fed speakers talk.
Listen to see if we can hear him vaping.
Having the Russell, up almost another 0.5% today. is a positive
Turks
sign.
are bad,
And
okay?
I guess to me what that means is we're getting some of these risks that were unknown when Silicon Valley Bank, for example, went under. Where some of those risks have become known, and we're coming up on this earnings cycle. So I think as we kick this off, in the next couple of days here, unofficially kick off with the banks. I think don't sleep on these medium-sized banks as the earnings start coming out. I think we're going to hear another really positive story probably from the JP Morgans and the Cities and the Wells Fargos, right? The big money center banks that are out there. And the housing has been strong, so I don't see a huge reason to think there's going to be a big dip. Obviously, these higher rates for longer makes it more difficult for them to position. It makes it more difficult for all financial institutions to position along the curve, and the inversion's real. So, a lot of that matters to the big banks. They make the headlines. As the smaller banks start coming out, as earnings season kind of gets underway in the next 2 weeks, I think that's going to be a really important portion of this in terms of that sort of underlying stability, and if that holds up. Because yes, it's been an 8-10 name driven rally, but to your point, there has been more companies, more of the indices have really picked up and come to life as of late. And can we sustain that through earnings season, with some of the concerns around the consumer, with some of the concerns around the financial sector? And if we do that, I think that technical support that Mike was likely going to touch on here is warranted.
Yeah, unfortunately, we lost Mike this morning. But tomorrow, consumer sentiment. Then we get the earnings piling in. It feels like that's kind of the last check, to your point, on earnings. If they go well, the Fed, the language, the data, I feel like none of that really has a great surprise factor after the way we're seeing the market respond to inflation.
Right. I mean, I go back to like the narrative is fitting very well right now. So, as a risk manager and you're just trying to run scenarios, like what's the next thing to break? What's going to happen that's going to derail that? I do think that, my biggest concern continues to be just the sort of churn around corporate real estate and into larger, multi-family type housing units, larger, city-based kind of real estate, to me is concerning. I don't think we're going to learn very much about that in this earnings cycle, but that's something we have to really watch for. That's an obvious sort of unknown, right? We don't know how impactful that's going to be. And these things are big, illiquid investments for lots of different types of institutions, banks, insurance companies. Where is that really? Certainly doesn't feel like an 08 kind of housing crisis, but where does that stand? And then the decisions that are being made internationally right now, where rates are continuing to go up around the world while the Fed pauses. Canada raised earlier this week. There's a lot of things going on still rate wise, and unfortunately this war seems to be escalating with between Russia and Ukraine again, right? With different weapons being utilized and things like that. So we just don't know the impact on particularly European inflation, because that's a little bit concerning. If those aren't as under control, maybe as we think it is in the U.S., because it is a global inflationary kind of issue right now.
Yeah, theirs is a lot more problematic, it seems like, right now. Thanks for carrying it for us here, Nick Theodorakis. Appreciate it. Sorry to lose you, Mike McCurr. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides is up next.
Petalides. If you guys have been around for a bit around the channel, I'm into Aptera. These solar EV cars coming out. They're doing aerodynamic testing at the Pininfarina wind tunnel. We'll watch this video. Looks like they've completed. So they're basically trying to become extremely aerodynamic, and they already are, but more testing in wind tunnels, they should be able to refine it even more. It says, we're excited to announce we entered the validation phase for aerodynamic shape at Pininfarina's world-famous wind tunnel. Completed correlation testing that corroborated our computational fluid dynamics. So CFD, that's something that like planes and stuff get done. So yeah, they're pretty serious about the aerodynamics. CFD work and offered insights on the vehicle's shape. By integrating Pininfarina's aerodynamic insights, we are on the path to creating a passenger vehicle with the lowest drag coefficient ever. with Delta builds on the horizon. We plan to build. So they've been building the cars in like stages, alpha, beta, delta. I think they're doing it. I don't remember, but delta's like one before the prototype, I guess you'd say, or the production one. We want to perform a full suite of wind tunnel tests to obtain the final drag coefficient. So they'll probably change the shape a little bit more after this. Probably mostly minor adjustments is all they'd do. You're not gonna let me do it? There. Love the pop out. Spy rip right there. And just back up to the highs. I've never seen a wind tunnel like that where it's open. That's crazy. It's pretty cool. That way you can just see it, not like through glass or cameras. That is neat. Spy's kind of building inverse head and shoulders here, actually. Interesting. Really just need to break out of the high, though, before it's validated. Keep bouncing off that shoulder. Got Carvana 100 calls? Oh my gosh, dude. I mean, I guess if you're expecting a squeeze, gives you a little bit of time. They even have what? Looks like GME. 490 strikes. Ivy is actually not crazy. How much have these moved? These have gone from the low of 7 cents to a high of $4.70. Pretty nice return for such long dated contracts. And so far out of the money. Contracts at one point were $80.50. That's when they were written. That's when Carvana was trading at $130. Nikola breaking out some more. 25%. Plug up 10%. Firm 7. Nice little breakout on plug, really. GME, a little pop there with some volume. Up 2.15. MC's up 1%.
Continues to be upended by streaming. He also hinted at a strategic partnership for ESPN, which generated a ton of noise, and said they plan to pull back and find their focus.
All right,
to
see if I can break the high of the day.
Regarding some of the spend they've seen on Marvel and Star Wars films, which are notoriously very, very high budget films. So Street seemed to like what he had to say, but this name, little to give investors excited about over the last several months. Although shares are higher about 2% this week and still up about 7.5% from their 52-week low, just incomparable to some of the strength we've seen in names like, Netflix or even Roku. They've been sort of on an island of their own here, definitely weaker, relatively speaking.
Jenny Horn, thank you so much. Two important stories today. Markets correspondent, appreciate it. Let's get some insights to the news shaping the markets. For that, we welcome in right here in person, Kevin Nicholson is with us, Global Fixed Income CIO at Riverfront Investment Group. Thank you for being here.
You'll have it for earnings?
Thanks for having me.
So I think that some folks were expecting those prints to come in, CPI and PPI, showing.
You think their earnings is going to have
right? So we somewhat got what was expected.
bullish outcome?
About it?
I think that we have to be very careful.
Planter's got a
reading too much
head and
into
shoulders on
one
the
set of
5-minute.
numbers.
I'd wait for an entry
Especially
on that
with
long.
CPI, as we know that it has a base effect going
Today.
on, where we had much higher numbers last year at this time that are rolling off.
Pretty bullish there, Tasty.
Month-to-month comparison isn't going to be a big deal next month, but when you look at the year-over-year
20 for
comparison,
August? It's not much
going
time.
to be tougher to beat, and so I think that that's where we have to be careful. We've seen the fixed income markets rally heavily over the last day or so because of that, and I think that yields probably got a little too low too quickly.
Yeah, I mean,
All
when
right,
I saw the
Tasty.
2-year going to 5%,
All the
10-year to
trades.
4%. I mean, the trajectory, when you see those rates moving quickly, I think people start to get a little nervous. But the markets really reacted.
I'm not. I don't share this bullish of the sentiment.
Like Tom Lee, used to be at JP Morgan, was
I hope it works for you. I don't have much position in the other way, so
got it
whatever.
Over this 1 week based on these moves. But you're watching some of the recessionary indicators. Tell me where you think we are pertaining to recession for this year or next, and what kind of indicators you're watching most closely.
I think it's really important.
Yeah, I feel like we've been in that,
to
though,
follow the MBER's
for
recession indicators. So there's
almost a
6
year
of them
now.
that they watch, and the reason that I look
This
at them
entire
is because
year
they're
and
the
some of
arbiter
last year, since October.
recessions here in the U.S. I mean,
And
so
really
some
accelerated
of
in
the 6 are
May.
Like, real business sales. You have real PCE.
When does that end?
Real personal income, less transfer payments.
We just had this
industrial production,
bullish news, which might be a
non-farm
sell the
payroll,
rumor or
and,
sell the news.
You have household employment and
We're at
industrial production. You're the one who
yearly
provided
highs.
these notes.
Yeah.
So,
I don't know if we're
when
going to be
you
melting
watch
up
these
yet.
things, what are they telling
I don't
you?
know.
Because we know that the Fed really watches PCE more closely.
Yeah, I'm more bearish than
Right.
that, basically.
Right now, what they're telling us is that we're nowhere
Like a little more
close to a
confirmation.
recession.
Right.
Typically, what you see is these things all will start to roll over one at a time, and the closest that we got to that was industrial production had started to roll over, at least we thought earlier in the year, and then it ticked back up. And so right now, we're not experiencing any of that. And so as we push recession further and further out, that is actually good for companies. It gives companies the opportunity to be able to adapt. I think that our companies here in the U.S. that you find in the
Wish is up
S&P
6.5.
are very resilient, and they've been able to adapt. And I think that
Chart
the
still
bar
looks
has been
nice.
set too low for earnings season, and I think that they're going to surprise.
Really? That's interesting.
Bar's too low for
I
earnings
think
season.
That would be great news. I think people would welcome that.
Oh, wow.
At the same time, we've had oil that has pulled back. You talked about the comps, right, of the CPI this year versus last. I mean, one of the things about last year was energy was much higher. Strategic
Nikola new
petroleum
highs there.
reserves was something on your mind as well. You know, China demand, where is that? That doesn't seem to be evident at this time.
Yeah, I think oftentimes we put too much emphasis on China. I think one of the things that we're looking at is when it comes to oil in particular and the SPR is that in 2021, when the administration made the announcement that they were going to start releasing some of our reserves, we thought that that was going to be a temporary thing, but we're now 260 million barrels below where they announced back in November 23rd of 2021. And they've said that they're going to actually start buying around $70. So they put in a floor for WTI. And so that's why we think that with OPEC Plus cutting back
Cats are pretty
on
smart.
their production, that's a place that we need to be. And even though energy is one of the places that most analysts are expecting are going to have, you know, a rough earnings period, I think that because of that, so many people have discarded it that it has an opportunity to rally.
Almost a contrarian idea.
Yeah.
You know, also you have a low.
I mean,
US
ditch your IP.
dollar.
I thought you already,
It's more than a
I mean, yesterday, right?
Some of these multinational companies.
Exactly.
Hey, Cameron.
I want to get to some of the strategy. You know, fixed income.
Would you
is
buy
really
back
your
in?
Wheelhouse. But what are you
Ace,
telling
did you buy
folks,
back in?
some ideas of what they should do at this time when they're sort of repositioning for the year ahead?
So for us, I mean, you know, I run a balanced portfolio, 50-50 portfolio. So what we've been doing is on the fixed income side, we focus on the front end of the curve, high quality credit, 1 to 5 years. We didn't really want to. We wanted to stay away from money markets so much because you have a reinvestment risk. And at some point, the Fed is going to start cutting rates. But I think that that's a year or so away. We think that, you know, the Fed will raise rates once, maybe twice more, and then they're going to keep them there for an extended period of time. That gives them more ammo for the next crisis that we have. But from a strategy standpoint, we want interest rate exposure at that long end of the curve, but we're not quite there. When we think of it in a balanced portfolio, we're neutral duration relative to the aggregate, but what the difference is that we're underweight fixed income, so the contribution to duration is a lot lower. But in our all fixed income portfolios, we are actually short duration, and so we think that as yields continue to move up as the Fed hikes, that's an opportunity to then layer in buying longer treasuries.
So if you're more leaning to the shorter end, right, 1 to 5 years, how would someone go about it? What would be some suggestions? If they make a call, I mean, what should they be asking for specifically, or not?
Well,
staying away from, you know?
I think the biggest thing is your risk tolerance. You know, in a more conservative portfolio, you stay in high investment grade credits. You know, it's the benchmark names, the bellwether names that everyone knows. When you have a longer time horizon, in our longer horizon portfolios, one of the things that we've played is high yield. We have short high yield in the portfolio with a mix of treasuries on the long end, because what we're doing there is we're actually taking more equity exposure, just a lower wattage beta from that standpoint.
Do you look abroad too, or not so much for fixed income?
So with fixed income abroad right now, there's really not enough yield pickup to really make it worthwhile. That's why we've been really staying here.
And this has been working.
Yeah.
Right? If it's not broken, don't fix it. You know, and as you said, you're guessing that, and like most agree, that the Fed will raise at the end of this month and maybe one more time after that to tame inflation. They just don't want it to rear its head again. It's wonderful to see you. Kevin Nicholson, thank you so much for being with us. Riverfront Investment Group. Thank you, Kevin. Plenty more to come right here on Trading 360. In our 360 Spotlight, we'll be taking a look at the gaming industry and some of the winners and losers there, what you need to know for the rest of the year. And our disruptor today, Trade Desk, after news that it will join the NASDAQ 100 at the end of the week. George Stills is standing by with an example trade. And our 360 round will break down the earnings from Delta Airlines. That stock, new 52-week highs. Good news there for Delta. And up next, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. Alan Nuckman, BullseyeOption.com, will take us through the trades for Micron, Matador Resources, and TripAdvisor. That's next right here on Trading 360. We'll be right back.
Whether you're an experienced investor,
Yesterday you sold it. Yeah. Nice. Probably wasn't a small profit. Didn't you buy it pretty low? Buy it down here? But you did pretty well on it. Got something for me? Fire Marshal Bill, pool's filling up. Did you get some new ionizers? Look at you already trying to swim in your pool. Ah, there you go. Is that with your case on? I'll puke after that. Work at AMC and just got fired for refusing to add this liquid to a customer's soda. We're instructed specifically to serve this to sound of freedom audiences. I'm a microbiology student. Took to a lab exam and found what it looks like nanobots inside. What? Hey guys. Well, more chop on this buy. Let's see what Liechtenstein has to say about it.
Most recent test of the 75 area
Ekron.
tested a key area balance 73. It failed. We're rejecting that. I said again that 62, 63 area. 55,
Don't make
56
Liechtenstein
is
say
really
it
important.
twice.
This is where I got the 55 area, 56 area. If we do break down from there, we open up a door for a retest of the lows that we saw. My only concern here, yeah, intraday trend up, but tested a key area up around 72, 73, failed. Looks like we're starting to roll over.
Yeah, so hitting those triple top, you see that the efforts to go higher, but then pulling back. And Alan, there are people who are questioning if maybe some of these stocks are just too expensive at this moment.
Well,
yeah.
GME is an example of that. There may be some stocks that have run too far, too fast, and they are due for some profit taking, but I would just look at it as profit taking. I hear Ben, but I'm not listening to what he's saying because he had the same exact point when we had that double bottom at 50 and it bounced. It's about risk reward. And buying here at this midpoint level of this range is a good support risk reward play. And if we simply get back to 75 again, this option is going to gain nearly 100%. It's limited risk. It's got 3 months of time. It's lagged the market. And we've made money in Micron repeatedly.
Yeah, all right, understood. Let's get to your next one, Matador Resources. Why did this one jump out at you?
Well, we've talked energy for a long time. Now, we haven't been right, but we haven't really been wrong because we've been buying some distant options in a lot of energy companies. Now, it looks like crude is finally getting the bottom base that we've needed when it comes to energy. Now, if you look at the energy complex itself, it's held rather strong if you look at XLE. Now, this is an individual stock that's got a PE of 5. It really can't, I mean, anything can get cheaper, but, you know, from a price to earnings standpoint, it's really hard pressed to get cheaper. I think the energy sector is the last bastion of risk reward here. Really, I mean, so many of these energy stocks have been left out. When that sentiment shifts, when that changes, and we see that happening with bullish divergence, meaning it made new lows in May, but not new highs and implied volatility. That's a sentiment shift. And we've seen in June and July some leverage buying in this stock. So I think it's got some upside. I'm looking at the October 50 call trading for about 8, and it's $6 in the money, got 3 months of time. And I'm looking at this energy sector. Once the ball starts moving, and I think this dollar below 100 is part of the catalyst that's going to get this going. Because we could see a huge rotation into these stocks. Let's remember how energy led the way 2 years ago, and it's been left behind. And the PEs on these energy stocks is ridiculously low.
Yeah, nobody can say those are too expensive with a PE of 5. Let's get to Ben taking a look at this chart.
Nicole, I think this is probably the one stock Alan and I are going to agree on today. A very well-defined bull trend on multiple time frames, taking out key moving averages. Let's begin again with the more granular in this instance. We're going to start with a 5-minute time frame. Bottom left corner, we're going back to Friday. Most recent highs up around 56.20. It does look like we're starting to consolidate here, but I also went ahead and identified some of the areas of value that formed on the way up. We've got two of them, pretty well defined, right? Again, 51.50, you can see overlapping rotational. We get a breakout vertical type pattern, which transitions into that horizontal phase. Look at the well-defined vertical phase that we just recently kind of came out of. It does appear as if we're seeing something a little bit more overlapping rotational, but you can see the transition between the two here, and that's what I really look for. Stack up these areas of value. You can determine that we're seeing, again, a trend higher. The working assumptions that will continue until we take out something significant that was established on the way up. And, well, I mentioned here that we're on a trend higher environment here in multiple time frames. You can see in this instance we're going back to 2020 where we bounced around 10. You can see again that staircase type pattern playing out, currently forming an area of value around this 55 level. This is a bigger picture time frame daily. This balance goes back to the beginning of 2022. We've seen an upper extreme around 75, a lower extreme again around that $40 level. But I do want to point out each instance here I was just talking about until we take out a key area that was established on the way up. Look at how each one of these tests, 25 got revisited, 32 got tested. We had 40, which got tested multiple times here, and each one of these held. So that's really solidifying that bull narrative. Speaking of solidifying the bull narrative, above the 50, above the 200-day moving average. You can see, again, taking out the levels that we saw back in the beginning of April, trying to reverse a bit of a more intermediate kind of a downtrend that we've seen since the beginning of the year. But, yeah, looks to me like the bulls are in charge here in this instance, Nicole.
I see. Yeah, I mean, that was a great chart really showing us each time it's moving higher and holding. Alan, final thoughts there.
I'm really not going to say anything. I'm going to let Ben do the talking for once. So we can't stress enough the impact on the dollar breaking down. Now, is this a fake out breakdown or is this a real breakdown? But technically, it traded between 105 and 100 for more than 6 months. That targets 95 on the downside, and then we could be heading to 90. So the dollar decline could be a big, big boost that we can't understate.
All right, and then we look to TripAdvisor, which has been creeping higher, but took a leg down on its last earnings, had some heavy volume at that time, and was trading somewhat sideways. Where do you think it's headed?
Well, it's got the setup that I look for, that bullish divergence bottom. It made new lows in May, but not new highs and implied volatility. It also, we're seeing leverage buying here in July, June and July. So that's very positive. It's traded between 14 and 18 consolidated. I know Ben loves consolidation, and it's bounced and breaking out. If it breaks out above 18, then we're looking at 21 rather quickly. Now, this is a stock that's down more than 50%. There's a gap up at 25, makes it very, very attractive. So what I'm looking at is the December option. December has 5 months of time. The December 15 call gives you the right to essentially buy at the low, trade for about 4. And so, you know, we're a couple of dollars, almost $3 in the money on this option. It's a good play. If we get to the 25 level, the option gains 100%.
Right. Okay. What are you thinking about TripAdvisor, Ben, when you look at this chart?
Well, I can see the bullish narrative here when I look at the more intermediate time frame, the more granular. But once I start to step back, you're going to see a longer-term trend that's well defined to the downside still. And what appears to be still yet to reject that working assumption, it appears to be a valid one. But let's begin with the 5-minute time frame in line with the look that we've had in terms of the other two names. We'll start with the granular, the well-defined trend up here. I've got the areas of consolidation. Alan, you're speaking my language. In this instance, I took out a fine-tooth comb. You can see that we really sort of broke it down here, but I really wanted to point out here how this plays out here on the more granular all the way up to the bigger pictures. That's what I like about this methodology. Bull trend, bear trend, you're talking stocks, bonds, ETFs, options, across the board, it's applicable. Taking a look again, well-defined, bottom left corner to top right, currently balancing around 1770 as long as we hold above 1740. Working assumption is that we'll establish a new area of value at a higher level. Taking a look as we step away from the 5-minute time frame, I mentioned that longer-term trend. Here's the more intermediate look. From 2830 back in February of this year, all the way down to 1439, and recently just more sideways than anything else. You can see the high conviction breakdown in reaction to earnings. You can see how we've been kind of balancing and just accepting this area. As long as we hold below 19, the bears don't have much to worry about here. This is just kind of a digestive type trade. Let's step away from the 4-hour candles because I want to show you going back back to this chart, the daily candle shows you March of 2021. So we're looking at the last few years of price activity, couple years of price activity with, again, areas of value that formed at lower and lower levels, significance of 16 in this instance, longer term talking 19, 21, whether you're looking at the 4-hour or the daily. But yeah, I mean, there's a well-defined trend of the day, trend on the 5-minute time frame, the more granular, but this longer term chart still telling me that the bears, again, in this instance, are in charge.
Yeah, when you went back to March of 21, I mean, that chart, that's a tough one when you look longer term. Not a pretty one at all. Alan Nuckman, thank you, Ben. Alan Nuckman, final thoughts here.
Well, I agree that the trend overall is down, but it's made a bottom base. It's done what I look for, and it's filled that first gap. So momentum is there. The second gap, if we can get above 18, the second gap, it should be attacked at 25. And the beauty is it gives you the right to be long from 15, which is within pennies of the of that low. And it's got 5 months. So it could be a nice little Christmas present to go on a trip, being long from 15 with expiration for Christmas. That's something that I'm very,
Christmas
very
trip,
comfortable with. And I'd like to see us unwrap that winner.
All right. Well, we'll have to keep having you on, and we'll continue to follow these. Alan Nuckman, it's great to see you and your pet in the back, which is very cute. Alan Nuckman, Chief Market Strategist at bullseyeoption.com, and Ben Lichtenstein for the big three today, where we had Micron, Matador, and TripAdvisor. Coming up next, we want to spotlight the gaming industry. We'll be joined by the analyst from Macquarie, who will recap the first half of the year and give us some top stocks for the rest of the year. The outlook on the gaming industry next, right here.
Yeah, I heard your ionizer got stolen and your chlorine. It was awesome. It looks like when I load TweetShift's site, it looks like they don't have a notice about it not working anymore. So maybe it's working now. Do I have to like refresh it? I can't remember how to do that. Oh no, they're still experiencing it. They don't have it on the homepage anymore. It's starting to look bad for press. Look bad on the company. You have to click in. It says, "Oh, it's not working." Yeah, I think it's still down. I haven't used Threads, no. Ace, you know you can get like if you're thinking about getting a pool pump and everything, get your pool set up to stay filled. You can get like whole built-in ionizers, not the floaty ones, which is what I would do if I did it again instead of salt. I would just do ionizers. Then you can regulate how much copper it releases. Just have like the perfect amount. And for a pool that big, it'll be much better. Because realistically, you probably need like 3 of those things. And then it's hard to regulate because you just take one out, add one, it's not as precise. I don't know. That's what I would do if I was setting that thing up. Where the heater runs through it? Yeah, you just set it up. Put it in the UV light. Yeah. Yeah, I've heard the UV lights. You're putting one on the filter?
Yeah, Nicole, we are actually seeing Coinbase up about 2%. Now, this
I've
is
seen
just
them just
recently.
like,
It was down about 2% around
I
15
haven't looked into
minutes
the
ago.
UV
So
light
there
thing a
may
whole
have
lot.
been some
Oh
news
yeah,
that just came
Coinbase
out here,
ripping.
but we are seeing Barclays downgrade Coinbase
What's
to
the news?
underweight from equal weight with a new price target of $70.
Oh,
That's
price
up
target.
from $61.
I
Now, the company,
know
they are
about
saying
UV
that the
lights
company
for
was
like
surprised on revenue and costs in
air,
the past few quarters,
you know,
but with
kills bacteria,
volumes,
whatever.
especially in the USD coin market,
As far as
it has
pools,
been
like I don't know
depressed
if it
over
actually,
the last couple of
I don't know.
months here. We
Anyways,
have seen
the
price of
copper though
Bitcoin
works
and
really
some of
well.
the other cryptocurrencies going up, but the volume has not complemented that movement to the upside. They also believe that the regulatory overhang is
But I
starting
don't
to
think you need to do salt water. I'm saying,
and also the significant
I wouldn't.
shares causes it to really have
I would just do, yeah, you could do UV, but then the copper,
compared to the fundamentals that they
and
have,
and then it just plums right into your
we also just
your
have
pipes
to kind of keep in mind
that go through your filter and your water pump.
System that's going to be launched here in July. That could also be
so it introduces the copper to it, you know, I think after the filter.
Spot ETF
So as it's going back out into the pool, into the jets.
The major ETF companies that are out there, that could also take some volume away from Coinbase as well. But we are seeing the stock up around 139% year to date. So we are seeing some pretty good gains when it comes to Coinbase.
Water cooling rig? What's that?
Issues that we have seen from a regulatory.
Nickel's up 40%.
Yeah, without a doubt. I know that the lawyer had been responding to the SEC strike attempt this morning. That was something that we were watching closely. You do have some testimony going on in Washington pertaining to the FTC.
I don't think you, no, not just, just UV. I don't think will kill. It'll kill bacteria, but it's not going to kill algae. I don't think. Not like the copper. You could try it. I think you'll need both.
It's time to spotlight the gaming industry, and for that we welcome in Chad Bainens with us.
Nicola's almost at $2 there. That's my next resistance on it.
Group. Good morning to you, Chad. Thank you for being here. So,
AMC getting a little jumpy.
Take a look at your note from yesterday.
Yep, up 2 1/4.
How would you describe the first half of the year when it comes to gaming?
Thanks for having me, Nicole. So the first half
lag
in gaming, fundamentals were really strong. We
saw
heavy beats across the board. About 85% of the companies beat expectations in the first quarter by 3 to 5%. So really nice earnings surprises in that.
That's
first
about as
quarter.
algae.
We saw buybacks. We saw deleveraging. All the things that you want to hear and see. However, a lot of the companies were a little shy in terms of giving proper guidance for the year. So I think analysts estimates for the year
in your computer
and for the back half remain somewhat conservative.
Why did you have a UV light?
This approach, the gaming stocks actually underperformed the
I guess from it sitting, it could build up some bacteria when it's not running.
That we're hearing about travel,
that's funny. I've not thought about that before. That's insane.
Really helping this industry. So
it's not supposed to be water in there, though. I don't think.
And more importantly, this earnings.
I think it's like a sodium carbonate or. I don't think it's just water.
And then we expect for a more positive outlook for the back half of the year. I think analysts are expecting a low single digit.
There is no all-in-one system. I don't think for that.
We're gonna have to tweak this as we hear some positive commentary from the management team.
For solar,
this week
panel, battery. I mean,
kind of a
you're gonna have to put it together, especially if you want to do ionization or UV.
Understood.
Yeah, distilled water.
Guests on who think that earnings estimates in general are too low and that things.
Why do you have to have a UV light on distilled water?
We expect, and as you said, while we're
you're growing algae in your computer.
Clear guidance from some of these companies, you actually are raising some estimates on some of these names. I know you have some large cap picks and small cap picks, but overall, I mean, how do you think the consumer is going to be spending at home here in Las Vegas, and then you have the Macau factor?
Sure. You know, the way that we split the subsectors in gaming, we still like online gaming and sports betting first, Vegas second, and Macau third, and then the traditional regional
Macau
and suppliers fourth and fifth. So as it relates to sports betting, DraftKings has been the darling this year, right?
Or chop on SPY.
130% year to date. DraftKings is one of the only names that's outperformed Coinbase.
Lyft is ripping up there too. Dang, I was hoping to get some more positions.
Seeing from a sports betting standpoint, reduction of
chill, Lyft, just chill.
Overall,
build me first.
Addressable market going higher for
XRP.
Really?
So
we still like to have some exposure to that sports betting.
I can't even see that on Webull.
And we think that the increase in
why is XRP going?
will definitely help as we get into NFL season, which is about, you know,
to avoid it in the radiators.
Secondly, in terms of Vegas,
but being distilled, can you
Vegas
will it still grow?
Food and beverage
I mean,
revenues are up about
algae?
40% versus pre-pandemic.
No, you can't
right?
grow
So
algae.
the numbers are
Not without
in
light.
the models. We've had record quarters for the past 4 or 5 quarters. So in terms of what's next, this week the Sphere
And even
opened.
in
That's
distilled
a
water, I'm not
20,000
sure
person
if
arena.
that stuff can grow.
Really impressive
Might be like
concert venue.
bacteria, but
the best part for the casino operators is
you're gonna have
that doesn't add
some
additional
anyways.
supply in terms of hotel rooms or casino tables. That just brings another reason for people to go to Vegas. So we're still bullish on the back half
Not easy to swipe.
the year for Vegas operators. MGM and Caesars are the best way to play that.
Yeah, that's
stocks
true.
are up 3 and 4% today. They've done okay year to date, but
I'd probably have your batteries
some nice growth
remote.
there. And then as we look
In like a much
that,
more secure area,
has been the big sector
secured building or something.
There was a lot of hype in the fourth quarter and early in the first quarter, and that has waned. That Chinese
Panels be
consumer,
fine.
we're
Should put them
still
up on like a
waiting for that
roof, right?
consumer to come back. So within that
Pump.
category, we like
I don't know
Las
if
Vegas
that would
Sands.
get stolen. Maybe
Caesars, MGM, and Las Vegas Sands.
those aren't worth as much though. The batteries are what's all the value.
For large cap picks, and then on the small cap side,
Couple of day
like
trade.
some of the value names trading at sub 10 times earnings.
Well, yeah, like
sub
Lyft.
6 times EBITDA, and that would include
EBITDA.
AGS and
How many
Every,
EBITDA does?
and then a company we just initiated.
I don't. It might keep coming down a little more though before it keeps going.
Yeah, I mean,
Oh,
thank
those are my
you
trades.
for all of those, because you went through a lot there, and I was actually taking notes, and I'm glad you did, because
I like neg
there's so many
potentially.
different, aspects to this.
A
And as
position
you
on
said,
it.
when it comes to Vegas,
Better
you're
if it
looking at
breaks
names
out,
like
but if you're trying to
MGM
get
and
early.
Caesars, when you're looking at Macau, you're looking at Las Vegas Sands. And for the
Rad, I'm not
online
sure about.
and sports
Rad
betting,
might be good.
is
These
there
might
any
not take a couple days.
DraftKings
These
for
could take
that?
a couple weeks.
So DraftKings has had a phenomenal run. We've seen some broker upgrades for other brokers that had seller neutral ratings kind of capitulate here. So I think that has helped, drive the stock higher. We're at $33 at this point. That it factors in, I'd say, a decent growth outlook in the next 2 years. To get higher than that, I think we'd have
then
to
you can see
hear
the guys that stole it
something,
from you.
better than expected on this upcoming DraftKings call. We are expecting a nice Q2 beat. There are other ways to play online sports betting. The main one that we've stuck to is
starting to move a
Penn
bit.
Entertainment, ticker PENN, is the company.
Yeah, nothing crazy right now
and the
as far as
score. What's
plays because
interesting
a
here
lot of
is
stuff
over
just
the
ripped a lot.
weekend,
That's
this was a
looked nice.
positive.
Lyft is
Barstool
one of the only ones that
Sports,
hasn't done too much of a move yet,
app shut down.
and it's
So
kind of at a
that
better
meant
entry because
that
it's
they're going to integrate
off of 2
the
red days
score
now.
technology, one of the reasons why they acquired the score for over $1 billion, into the U.S. And now users in the U.S. who are logging onto their Barstool Sports app, which is owned by Penn Entertainment, will have the technology from the score. And technology has been a huge driver for DraftKings. It's the
Still
same
like
game
neg too.
parlays, it's the menu of options, and really just that customer experience with cash out options. So hopefully, Penn, which has outperformed in the past week, it's up about 11%, and it's been a name that has kind of been left behind. We think that this tech integration could be a positive for their sports betting app. So that's kind of a secondary way.
Yeah, hop on Discord.
If you're not comfortable with the
For sure.
DraftKings investment, given the run up,
I'll do it right now.
Could be a deep value way for some exposure there as well.
The guy that got caught.
Chad Bannon, love having you on the show. Thank you for all the
I mean, like they went out and got him.
in the world of gaming and this outlook. Thank you so much, Chad Bannon of Macquarie. Thank you.
Unless if you're gonna like
And,
be a
so
vigilante.
Coinbase, folks, that's
I feel like cameras are only good if you have law enforcement that can and will go after someone, or it would deter someone from stealing in the first place, which I don't think it would do that. Not in Mexico. And law enforcement probably wouldn't go after them unless you paid them off.
A lot of headlines there. In the meantime, George Silas has his eye on
Hasn't Cloud heard the story?
after the news that it will
All right, yeah, tell me the story.
100. He will give us all the details and an example trade next on Trading 360.
TBLT down 2.5. Actually, I like TBLT. What was the other one? Oh, Jeff Brands. Either one of these, actually. What's nice about Jeff Brands is, looks like it's pretty much floored. Kind of how like HKD and stuff does. You could kind of park cash here. And then just have like a stop loss if it drops below here. And then just wait for a spike and sell on it. I was holding Jeff Brands for a bit and I might jump back into it. TBLT. Yo.
I had to switch it to push to talk, I guess.
Oh, what's up, man?
Yeah, so there's an alleyway near my house, like
hold on.
next to the property, and it.
There you go. Go ahead.
There's an alleyway next to my property, and it ends at the Rio Grande. So there's like, it just ends at nothing, like a cliff, right?
Yes.
And some guy decided he was gonna plant his house down there, like right in the middle of the road.
You mean like a tent?
You can't own that land. Right? No, he built a legit house of
Oh.
bricks. But I mean, it's not his land. It was just in the middle of a road, like at the ending of a road.
It's not on your land?
He built this illegal house. No, it's on like the city.
Oh.
The city, like if you built it in the middle of a regular road. Except it's at the end of a road, so he was hoping nobody would notice.
It's
I
like
guess.
It's close enough to the river also, it sounds like.
Right.
Yeah.
So he built this house, and he quickly found out that, you know, he can't get electricity and he can't get water because he's not paying taxes and he doesn't own the land. So there's a school next to him on the other side, and he hooked up to their electricity, and he was stealing their electricity.
Mm-hmm.
So he got caught, and they slapped him in the wrist, and they were like, well, we can't really steal any money from this guy because he's poor, so they just left him alone, right? And then he switched to the other side. He hooked up to my electricity, so my electric bill started going up. And I reported it, and they went and slapped him on the wrist again. And then he did the same thing again to the school and caused a fire. And again, the cops knew it was him. They could see the wiring going to his house, but they didn't do anything about it. And then finally, I guess the last straw was the school set up some cameras because people were hooking up to their electricity. So he went and stole the fucking cameras, but I guess they had it on a cloud. So his face, he didn't even wear a face mask or anything. His face came out in all the cameras. And that's when like the cops were like, okay, this is bullshit. So then one day I'm coming home, and normally I see his house at the end of the alleyway, and there's just this big giant pile of rubble. I was like, yeah, you fucked around and found out, bud.
So they took down his house?
Yeah, they tore it down. The bulldozer just showed up and just went to town on it. Which sucks, but I mean, honestly, he was being a dick.
No, you can't do that.
So that's why the stadium lights in my pool don't work, is because when he caused that fire, something caused the wiring to just go nuts.
Oh, it shorted it out?
Yeah, fried everything on that side. So I'm gonna have a pool party, and I'm not gonna have any. I'm gonna have to run like a cable from the house.
What
There's no lighting, so at night.
The picture you showed, the lights were working, or was that an old picture?
I don't think they were working.
There's some lights out there.
Which picture are you talking about?
I don't know.
Well, there's some lights. I don't think they were on. They shouldn't be anyway. At least not in the daytime, also because they use photocells. But yeah, it sucks because at night I can't really go out there right now. I have to take a flashlight and it's all creepy and shit. So I get an electrician to like go out there and fix it. But the pool pump thing, it's gonna be like a structure that they're gonna build, and it's just gonna have like a post that goes up with some solar panels on it. I'm not gonna put them on the roof of my house.
Oh, I see.
Inside the structure is gonna be like the pump and all sorts of stuff. And my idea was to have a clear pipe that just has an LED, like a UV light connected to it. Nothing fancy, you know, just like a basic light that's pointing into a clear pipe that goes into the filter. But I don't know if it'll work. as an experiment.
Yeah, I mean, it'll kill bacteria. It's just like, it's maybe stuff you can't see or don't care about.
Well, my whole thing was that maybe the water is going to be passing so fast that it won't make a difference.
Yeah, that could be. I mean, no,
like it has hit it for a while.
Yeah, I mean, are you expecting it to kill algae though?
I just figured it would help with something.
Yeah, you're trying to just do that. You're saying.
Yeah.
Yeah, I don't know. I've not messed with UV with the pool. I have them in for my I have UV for my HVAC. I have like a mini split that has UV.
And I did see that they sell some filters that have the ionizers built in, where it has to run through the ionizer. And
they sell filters that. Yeah, they have. I mean, they might have filters with it, but they have systems that you can just even add on to a system existing. Just plumb into your piping after. I think it's after the filter, and then it passes through the copper and charges it. But that's nice because then you can regulate how much you put in basically.
The pump has been going for 48 hours, so when I get home, it should be just barely finishing up, filling up.
48 hours.
I know, that poor pump, dude. I thought about running it in like shifts, but I was like, no, I just want to get this done.
No, it's fine. Those pumps are meant to. I've run my pool pump for like a week straight before. They don't care.
Right, they last a long time running.
Yeah, they don't care. It's just electric motor.
Especially because it's a submersible one, so I'd imagine it wouldn't overheat down there. It's super cold.
What do you mean it's submersible?
It's well, the pump that I'm talking about, it's in a well.
Oh, that's right. That's right. You're running it in a well.
Yeah, so the water down there is like super cold.
Oh,
so
yeah.
I was just saying, I don't think it'll burn out because it's inside like ice water.
For sure. So your pool's not gonna really warm up for this party, it sounds like.
By Saturday, it's still gonna be chilly, but like during the day when the sun is out, you'll like it. Like you'll be like, yeah, the sun's blazing hot, cold water.
Yeah.
But then as soon as the sun goes down, you're gonna be like, crap.
It's cold.
Yeah, it's time to get out.
And because you're gonna.
I thought about some solution. People were talking about some heat pipes.
Yeah. Yeah, you've seen those before.
That's just gonna make the algae come faster. Like, it
seems
like having heat is just gonna make it like produce algae faster.
Yeah, warmer water. That's true. It is more favorable.
And honestly, like the coldest water is at the very bottom, so I'm not really swimming at the bottom of the pool most of the time anyway.
Well, once you have a pump in your pool, it's gonna circulate the water.
Yeah.
So
right now.
Yeah, if your pool's working properly, the water should all be the same temperature.
It used to have a filter and like a whole setup.
I know. I saw a little house.
Yeah, it used to be public, and it had like a little small building there that had a filter, and it was like an old timey, like it would pour it on top of gravel, and then it would go through sand and stuff.
Yeah. You can get a modern one of those. Those sand filters, I think they work pretty well.
You don't have to empty it out though. Like I could see that being a pain in the ass, like having to dump out the sand eventually.
I mean, I don't know how often, maybe 10 years, like you replace the sand or something, 5 years. But no, to clean them, you back flush them.
Cool.
And then
I'll let you get back to your stream, dude.
Yeah.
It was good chatting.
Good chatting. Very, very slow day, so good day to chat, Ace.
Alrighty.
Thanks, man. All right, see you, buddy.
Bye.
Well, there you have it, Mr. Ventura. We've been blessed.
Often see Delta as the winner or a winner.
We have been blessed.
The way they
Good chat with you, Ace.
Also, they weren't raising capital.
Keep us up to date on your pool.
As others did during COVID.
Those voices sound different.
Lindsay, what are your thoughts on the latest report from Delta?
Ace's Pulte's Mexican cousin.
I think that this shows a strong demand in the consumer space continues to be the theme of this summer. This aligns with what we've seen in our own data. When I looked at the most recent wave of research we have, the share of U.S. adults who said they took a leisure trip in the last month was the highest it had been since we started tracking. So obviously, really high numbers there. And This is also bolstered by international travel. So folks are more interested in taking trips abroad this year. So all of that strong demand and continued demand throughout the summer, I think is, continuing to support the strong earnings that Delta reported and their adjusted forecast going forward.
Right, understood. I mean, you did note that there is still some trust issues when it comes to airlines in general, and I think that has been evident based on cancellations and planes not being in the right place and blaming on weather when it's not necessarily weather. So there are a lot of issues where consumers are sort of left high and dry. David, what are your thoughts on this takeaway from Delta in particular?
It was a great quarter. It's not surprising that some are choosing to take some money off the table.
Yeah, for sure.
Stock was up 50% coming into this number. They had already guided higher in the last couple of weeks, and analysts had already raised numbers on the heels of lower fuel prices. For me, just about every line item looked green. I think analysts will tear apart everything from load factor to seat miles, fuel, you name it. But what I focused on was that top and bottom line beat, even on the heels of a recent guide higher. Stock is obviously very cheap. The airlines are always cheap. But for me as a portfolio manager, 18% revenue growth this year, 7 times next year's number. They're buying back debt and free cash flow. That's green. It's hard to ignore this company.
Right, understood. But you did say don't fall in love with the airline stocks. I'll get to that in a moment. Lindsay, when you look at the group and, people are interested in buying into the airline stocks, what should they be considering? I mean, when you look at the longer term, first of all, business travel is not back at all in the same way. While you mentioned the demand, and demand has been very high. Every seat's taken. People are paying top dollar, though you said the prices have been coming down. But I mean, everybody and their mother went to Europe. And that's good news.
Revenge vacationing.
It is, and you make a great point in that business travel is down, and that's true and continues to be true. Business travel still has not recovered to the level that it was pre-COVID.
To this chop on SPY.
We believe, based on our data, that it is never going to, but it is being replaced by other types of travel, specifically blended travel. So the ability that people have to work remotely or in a hybrid capacity is allowing people to be a little bit more flexible with where and how they do their work. So that means, maybe taking more trips because they don't have the time off to use, but they can take their computer with them and work from the road, or extending business trips to add a little bit of leisure time. So while it's not completely replacing business travel, because obviously the spend level is different and the way the consumers make decisions in that space is different, I think that's something that the airlines are all accounting for in their projections going forward, because they're well aware of the fact that business travel is not what it used to be as well.
Yeah, understood. I mean, we'll see when that actually comes back. The anticipation is that the people are coming back to the office and business travel will return, but it just hasn't happened just yet. David, which names would you pick in the group? You said you do own Delta and some of the funds for Belt Point. Tell me, which names would you buy into now, maybe for a longer term strategy?
Delta, that's clearly the winner here. The others are all going to do well. I'm not a real fan of American Airlines. They've always stumbled in the past eventually. There's a bigger story going on here, Nicole. There's an AI story going on in the airline industry. Understanding data drives airline profitability, and getting your logistics right in every part of the planning phase, right down to anticipating how many sandwiches you'll need on a flight so you're not throwing away unused items. That's the key. And I can tell you, as a commercial pilot, the real exciting stuff is taking place in the cockpit. You're going to lose one member of the flight crew because you're just simply not going to need it. The planes already land themselves, and a pilot today is really a systems engineer. Machine learning is just going to make it that much more safer.
Yeah, and we had a lot of disruptions.
Dude, FAA requires two pilots.
One, I mean, for example, Southwest has
commercial
had a
jets.
tough time. Lindsay, final
Because
thoughts?
it's a tiny one.
Yeah, you mentioned trust in airlines earlier.
You're going to have two pilots for a long time. FAA is not going to drop that for a long time.
Airline that was uniquely impacted by the delays and cancellations on July 4th. But travelers often don't delineate between the airlines, and they kind of think about it in terms of airlines in general. And like you said, only 16% of Americans say they trust airlines a lot. So there's a lot of work to be done in terms of, customer service. And, AI might be a really big part of that as well, but kind of streamlining the process, making sure people get service when they are delayed or disrupted. That's going to go far in building back the trust that consumers have in airlines.
Right. Thank you both very much. And I hope you all get sandwiches instead of just dried pretzels, right? Or maybe if you're in first class, you get something better. David Nelson, Lindsay Roschke, thank you both very much. A good look there at Delta, which is at 52-week highs today. All right, that's going to do it for us.
See if SPY breaks out here. Breaks out of the chop. It would take it long if we do break. With your pool, Ace, you're probably, well, for one, you probably don't need heaters. I'm assuming where you are is quite warm, unless you're trying to swim in the winter. Since you haven't had water in there for more than like a couple weeks at a time, it'll continue to heat up all summer. So yeah, you probably don't really need heaters. That said, the heaters, you can regulate those also. So even once you plumb it, it's just like tiny little black pipes you plumb into your pool plumbing, and then the water goes through it and it just heats it, and you can regulate how much water goes through and how much comes out, so you can basically set your temperature with those two, which is really nice. And as far as algae, like, I wouldn't really worry about that if you did want like 80 degree or 85 degree water. My water is like, in the summer I get up to like 90 degrees, and it's not a problem. It was, I'd fight it, but that's just because my my saltwater system was not large enough for my pool. But now with ionizers, I don't hardly use any chlorine. That's what they like. They don't like chlorine. So I'm not even fully circulating all of my pool water in 24 hours, which is what they say you have to do. So you have to kind of calculate what your pump does, how many gallons per hour, and then how many gallons your pool is, and they say, oh yeah, I want to circulate all your water in 24 hours. I'm not even doing that anymore, and it's summer and the pool's like 87 right now. It's so warm. No algae, no nothing. It's crystal clear. It's amazing. I'm only running the pump 5 hours, which is crazy. So yeah, the ionizers are insane. UV I'm sure would kill some bacteria too. I don't know if it would. The thing with the algae, the UV is not going to kill the algae that grows in the pool. So it grows where the water is stagnant and shady. Depends on the algae. Some stuff grows where it's sunny, but so just running water through a filter with the UV light on it is not going to kill algae, because algae is not like circulating through your pipes unless it's really bad. Because it's stuck onto your pool. So that's where you need to have kind of the water in the pool to be killing it. Another option to keep your pool warm, which is crazy that it works, is just a cover, like a bubble wrap type cover, where you just a normal pool cover. I know your pool's huge, but if you wanted to swim in it more in the winter, stretch your season out longer. Ours was like half an inch thick, and then you put the bubbles, the bubble wrap side basically down, so it kind of floats right above it, creates a little pocket of air, so the heat of the water can't escape, and then that whole cover also heats up from the sun and just keeps the heat in all night so it doesn't escape. That increased our pool temperature by 10 degrees just having the cover on, which was crazy. And if you have a lot of debris around the pool, it helps keep it out, of course. It's kind of a hassle taking it on and off though, so it's one of those things if you really want warmer water. And but yeah, that's the cover is probably a lot easier setup than running the solar pipes for your heater, but to take it on and off is more difficult than turning a valve on the solar pipe. Fish coming down a little bit. SPY at the high, I don't know. There's a new high of the day on SPY. Let's see it. Let's see it. It's back to a 1-year high. I mean, SPY's at a 1-year high. I don't know why I can't see XRP on here. This has crypto. It's weird. if this has any legs on this rally here. Nikola rejected pretty close to that $2 resistance. Eyes climbing up. Look for a retest and see if it finds support on the breakout. That's all I'm looking for now. Yeah, it's breaking out. Okay, here's the retest. Good. Failed. Why fail? Ah. Okay, went long there. Got daily contracts also. Yeah, I think I only got a few. Yeah, I only got 5. I got 4 50s. I want more, but can't. I can't. All right, 449.39. Let's go. We're yearly high on the SPY. Congratulations. We're all here together for it. What an adventure. Wish is up 8.6. I don't know the sentiment with XRP.
The market is positively responding to inflation that was, yes, decelerating inflation was part of the bullish thesis, but I feel like this week's inflation data was even better than what the bulls had kind of modeled based on the price action. And then if you look at the Bloomberg probabilities, yes, it looks like we're going to get a rate hike this month, but the probability of a November rate hike, it was about 53% on Tuesday prior to those two inflation data points that we got, and now it's down to like 26. So it feels to me like the market is basically saying, hey, to your point, it looks like we've accomplished the soft landing. It looks like the Fed has one and done. It looks like the economy's still able to take those rate hike hits and hang in there. And in the near term, yes, valuation is full. We're at over 19 on a forward PE on the S&P 500. That's 20% above the 15-year average. But in the lack of any kind of bearish catalyst here in the near term, let's go with the path of least resistance. Let's go with the trend, and that looks like what the market's doing.
Yeah, that's a great point, because there aren't any real negative catalysts out there. You've got earnings beaten, the kickoff of earnings season, Kevin. Dollar hitting 15-month lows. I mean, this is pretty astounding to me, because that's supportive of equities and yields coming off levels. Last week, 10-year was 4.1% nearly.
We're so slow
and
today.
Now we're back down to 3.8%, even lower. I mean, that sets up for, risk on trading, right?
Tom, these eyes have seen too much over my career. And you know what happens when you think there's nothing on the horizon that could possibly show up? Something always does. Do I know what it is? No. I can have a couple theories, like guidance for some of these tech stocks. That could shake. You got a rebalancing coming up. That could be a bit of short-term volatility. We don't know what it is, but something always does, Tom. Nathan's point is so key on how far the S&P is away from its normal PE ratio, right? And so when it gets up there, anything can shake it, right? It gets less and less. If it's down at low levels, it takes a lot to shake it lower. But when it's up here, it could take a feather to shake this market right now.
Right, on edge. And that, Nathan, that fear and greed index is extreme greed levels right now that a lot of people follow in the markets at this point. But at the same time, when we look at the upcoming earnings season, I think a lot of people are focused on the earnings aspect of it. Maybe the companies are going to have to, lower head count. That might appease investors at this point. But the concern that I have when I look at the equity market rallying the way it has is we're getting led by a few small names. We're starting to play catch up with the Russell and some others. But is that
false break,
going to be the catalyst moving forward into earnings season? Is that maybe that guidance does come down, and that's where people have to be focused on right now.
Yep.
That along with the Fed.
I think it is, and given the run-up and the expectations that we've had, in terms of whether it's AI or whether it's basically just that the earnings picture is better than what the bears have been pounding the table on, you could get a sell on the news. Look at Delta. I know Delta is a little bit of an exceptional case study in the sense that the stock is absolutely torn to the upside over the past 6 weeks into the earnings report, but great numbers, and then you also see the stock selling off on the news. So if you're looking at a stock that has run up pretty nicely into your earnings report, that's one thing you want to be concerned of. But the other component of that is a lot of the EPS growth that we're looking at for this quarter coming up is coming from technology, and the expectations around what might happen with AI and the potential there is another concern potentially, in the sense that everybody's not going to be NVIDIA, and maybe the AI boom is going to ultimately assist on the top and bottom line, but maybe it's just a little bit too early. And so I don't quite know where the investor expectations around what they expect some of the guidance from the technology sector is going to be, but there's at least the potential for that to disappoint.
Yeah, and I think that's the concern now, Kevin. When I look at markets, I look at, I'll start looking at technicals when I've seen like a 4-day rally that we've seen. Yeah. The S&P 500 up 16% this year, NASDAQ up close to 40%. I start looking at technicals a little bit more. Do you ever, as a trader, you've got to take that into context? I mean, the number of S&P 500 companies above their 50-day moving averages is approaching 85% at this point. So it seems stretched. To Nathan's point, I mean, on a forward-looking PE, we're rich compared to historicals.
For the people that watch this show a lot, they've heard me say, I don't care how good the company is, at one time I want to be short it. I don't care how bad a company is, at one point I want to be long it. Because, Tom,
I like that.
Stocks get overbought, stocks get oversold. You want to just take out AI and put in streaming, Tom, and look at Netflix, the clear winner in streaming, right? The clear head of the pack in terms of streaming is trading $445. Well, it traded $700, Tom, during a moment of strength in the name, and now it's trading, like I said, the clear winner in streaming, and it's $250 off its high. So I think people have to understand there's a company and then there's a stock. Right. And the quality of the company sometimes is overinflated in the stock and underinflated in the stock, and that's where you get ideas from, trading ideas.
Definitely. Nathan, when you look at that, a lot of the other names that hadn't participated earlier on are starting to play catch up. Real quick, I mean, what are your thoughts here going into this earnings season where, maybe it's a prove me wrong type of theory for, traders and investors at this point?
Yeah, and you could see, and absolutely, and you could see some of the situation where you do get that broader participation, where if you do have those lower multiples, healthcare is doing really bad, by the way. If you do look at a sector like that, that is defensive. Yeah, there might be some of the, the Medicare, Medicaid stuff that's going on there and potentially affecting that sector, but you may start to see that catch up. That's what typically happens. If the market continues to melt up and the multiple continues to push higher, then on a relative basis, those unloved sectors usually begin to get some attention, but we haven't seen that kind of broadening. To your point real quick on the Russell, it did break above that 1900 level, which is resistance, which is another bullish indicator, along with semiconductors, new 52-week high, and the other major indices that you mentioned as well.
Yep, lots to talk about, lots to discuss, and lots to show some example trades on. All right, guys, let's take a quick break, but we're going to dive into the earnings season. We're going to take a look at JB Morgan Chase. The banking giant reports earnings tomorrow morning. And
well, SPY does want to break out still, looks like. Yeah, this is your UV right here, right? Is that a normal thing on computers? To have a UV light on your fluid? I've never seen it, or maybe I've seen it, I've not noticed it. Yeah, just don't. There's not like hard for algae to grow without sun. I mean, I'm sure there's some algae that do. As far as bacteria, like, I guess I don't see that really being a problem. Seems just like another RGB light to me. Get really bad? Really? Bad with what? Algae? Something you can see, apparently. I close out of my longs. Market's way too indecisive and choppy. Close my calls. I'll play the futures if the setup is better, but yeah, I'm done with options on the day. I think they were up like 15% at one point. Something does. That's crazy. I mean, I don't have any on mine. No, maybe that's because your hoses are clear, so you're getting light to it. Might be setting up a head and shoulder here. There's a little action on the market. Tiny bit of volatility. Some volume. There you go. You got some volume and it's waking up finally. Tired of stopping people out.
Call. It was about a 45-cent debit last I saw. Why
Ugly.
152.50? Roughly coincides with the implied move. Do you want to go against the options market and try to get cute with selecting a different strike? Well, that's your prerogative, but that's why I selected the 152.50.
Yeah, let's break this one down. Going out to that July 21st
Ugly candles.
series, 8 days till expiration, buying the 152.5 strike call, selling that same call in the July 14th weeklies that expires at tomorrow's close. We've got paying roughly about a 45-cent debit. There's your risk, $45 per spread. It's probably trading closer to $40 right now, or 40 cents right now. But look at your break evens here on this one, Kevin. 146 on the downside and about 160 on the upside. That might come in just a little bit, but I think the key on this one, Kevin, you're buying basically a 32% aggregate implied volatility in the July 21st options, selling about a 65% in the near term. So you get that divergence that because of the event risk in the near term.
Well, take my notes because that's what I was going to say. I mean, if you look at the implied volatility of the front expiration, and you look at the implied volatility of the next expiration, you can see where the potential edge is. And we don't know what edge is completely because the edge there's no bid ask. But what it is suddenly you look at a 1 week calendar spread and it's trading about 38 to 40 cents. So it looks on the eyeball test relatively inexpensive, and that's because you're capturing, you're selling a high implied volatility and you're buying less high. I don't want to say it's low, but it's less
yeah, that
high.
dye that makes
So
the P glow.
some opportunity might be. If you're bullish,
that's a good idea.
Obviously, you could do a bearish play as well.
Yeah, based on your assumption going into this report. And Nathan, the thing I like when we look at risk profiles,
a letter?
like
Oh my
Apex
gosh.
is out right near your strike, but you've still got that nice wide range for it to trade in to potentially remain profitable. But when you pay only $45 in risk for
Is it like
a
a
spread like
public
this,
party for all the city?
show that, hey, I can potentially profit $200 on this. We all know that probabilities aren't good for that because the options that you're buying are also going to fall in implied volatility, and that's going to lower that. So when you look at a trade like this, maybe it expands to 70 cents or 60 cents or maybe even $1. Is that what you kind of look for here if you get the correct move?
Yeah, it's up to each individual trader in terms of how prudent they want to be. Do they want to go for a single or do they want to go for a double? If you do get a certain percentage of profit, that's, again, in individual discretion, then you would take it off the table. But yeah, you might say, look, by the way, it's $45, but guys, you know this. Let's look at units of capital. Are you investing $1,000, $2,000, $5,000? Are you doing 1 contract, 5 contracts, 50 contracts? That's going to, obviously be tied to the risk. So it is cheap if you just do a 1-by-1. But oftentimes, a lot of traders will say, look, if I get roughly the implied move, maybe you wait a little bit for the market to take some of that IV out of the option, meaning wait about 30 minutes to an hour into trading. If you have a decent percentage profit on that, absolutely, take some off the table. Or if you have 5 contracts, take 3 off. You could do something like that in terms of, taking that profit so that that you're locking at least some of it in, and then perhaps maybe you let the other strike expire, and then you could do a roll. You could do a 152, 155. And this is all assuming you get the jump up and it's around the implied move. These are all what ifs, right?
Right. Yeah, I like that perspective on it. If the market's open, liquidity is provided. Hey, maybe you take off a portion of it if you did multiple contracts. Also, you know, you do need that move up there towards that.
And you've noticed when you use a UV light, you've taken it apart and you don't have any of that
Yep.
So it's still
on your heat exchanger.
Right. Yeah. I think it'll be heavily watched, and I think guidance is going to be key on this one also. All right, thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Folio for discussion on NVIDIA, which has led the AI-based rally this year in tech as the stock hit another all-time high today. Now, no shocker there. Stick around. Coming right back.
SPY is just ugly today. Oh, RAD's up 2%. Calls are down 20%. Smart. Eggs up 1.7. Lyft is back to break even. MC's up 2.25. GME's up 1%. With a little bounce off VWAP. Two water changes in 6 years. I probably need to change my water, I guess. Nice. There's a pop, finally. Jeez, make me sit on those calls. Opt out of them. Finally. I didn't have my calls for that pop. Well. Stop looking at me, Schwan.
On matrices of other things that have nothing to do with display. And so they started using them for other things. They got into cryptocurrency mining because of all the calculations they can do there. They got into artificial intelligence, self-driving cars. And so now it's way beyond gaming, even though they're riding that wave. So, you know, everything that they do, they're in gaming, they're in crypto, they're in artificial intelligence, and it seems like they've got a tailwind in every single sector that their cards are used in. So I love this company. Now, when we look at the data, though, the purchase intent data, if you look at that, it has been up and up, like I said, for years. But just recently, we've got a little bit of a tail off. Like it's starting to lose just a little bit of momentum as the stock hits all-time highs. On a 90-day moving average, which is what you're looking at here, quarter over quarter is only down about 4%. Year over year still up 42%. So very strong numbers. If you
GME's
change
come
to
down a little
30-day,
bit.
though,
Whoa, sorry.
The quarter over quarter goes from -4 to -17, and the year over year drops as well. So actually, the further you zoom in onto this recent change of purchase intent or consumer demand, it's actually getting a little bit worse. It's starting to show some signs of stalling. Now, that's in the wake again of, you know, AI mentions are up 550% on a year-over-year basis. Gaming mentions are up. Cryptocurrency mining is a little bit flat, but growing slightly as Bitcoin starts to rally. But overall, I think we're seeing just a little bit of a pause in the enthusiasm behind this company. And it's, you know, if you think about where it's come from, in October, the stock was at $108, and now we're touching almost $450. So it's been an incredible run. And I'm not going to say we're bearish by any means, but I wouldn't be surprised if we saw maybe a 10% pullback, something like that, maybe 15, as the stock gets a little bit too stretched and consumer demand begins to just stall just a little bit. If that happens, I think it's a great buying opportunity because everything, like I said, we've got every tailwind that this company is involved in or every consumer trend that this company is involved in is a tailwind. It's pushing the company forward. So definitely bullish long-term, but as you said, the stock is getting a little stretched. And since consumer demand is not making all-time highs, that gives me just a little bit of pause at these levels.
You know, Landon, I read a great article, very in-depth, about NVIDIA this morning, and it talked about the revenues are growing tenfold. The margins are approaching 40%. He went through a litany of all these positive things, and he said, if you add them all together and put them up, it comes to a value per share of $240. With all that good news. And when you look at this, how about this? It trades 41 times sales, not earnings. It trades 41 times sales. It trades 21 times 2025 sales. He said the normal semiconductor stock, the average is 5 times sales.
Yeah.
It trades 41 times sales. So I understand momentum. I understand strength. But the very second you see some weakness creep in, and your data is showing a little bit of weakness creeping in, remember, this has a 50-day moving average of 371 and a 200-day moving average of 236, Landon.
That's incredible. Absolutely.
Yes,
so when you've got a growth stock that is trading at those kind of multiples, I think the viewers know, but I'll repeat it. It works both ways. The multiple goes both ways. And if you see any contraction at all in revenue or sales, profit margins, any of the numbers that they're touting, then the multiplier goes the other way. And then all of a sudden it can drop just as fast. But I'm going to say, I love this company long term. I don't know if I'm.
I don't know. People are talking about XRP ripping.
Probably 400, 350.
Not sure why.
I'm slamming the table, but
I can't even look at it on Webull.
I think the trends will continue, but right now everything we're seeing is just sort of topping off just a little bit.
Kind of?
So yeah, I'm
That's your Chinese broker just says you can't look at XRP.
I'm not shorting it by any means, but I am looking for a pullback to get more shares in the 350 range.
Landon, you know, I look at like last fall when this stock was falling precipitously. Your data's starting to ramp up. Missed opportunities probably by a lot of investors at that point. But one of the questions I have for you is on this data, is this all for the GeForce chips and the consumer type of mentions that you're seeing? Because what I'm seeing from NVIDIA is the partnerships that they've created and the demand from the corporate side and where every industry is going to be using AI, so they want to be or have or need some portion of NVIDIA where maybe it skews that data a little bit because maybe you're not seeing as much of the corporate side as maybe the consumer side?
No, that's actually
Oh,
a very, very
Zoom's
good point. So if you think about like folio
Zoom's
data,
breaking
we
out of
know
that
what the
range.
consumer is thinking, what they're buying, which products they love, which ones they don't love.
Maybe.
And when it comes to businesses, it's just not nearly as strong. One business guy who signs a deal and buys
A little bit more.
100,000 chips, he might talk about it on social media, but that counts as one. It's the same as the gamer who upgrades his computer so he can play the latest game. So yeah, you're absolutely right. Our data does not reflect the business as well, which is why I think it's really important to look at the trends in artificial intelligence, like we talked about, plus 560% over the last year. So it is definitely a force that's pushing this stock. They're getting weaker with the consumer. That I'm fairly confident of. When I say weaker, I mean they're stalling out. They're not falling. But as when it comes to B2B, we don't have the greatest insights into that. So I lean on the trends, and the trends are very, very favorable for NVIDIA.
Yeah,
great point.
Yeah, you can't argue with that chart at this point. But yeah, great data as always, Landon. Really appreciate it. Have a great day.
Thanks, guys. Take care.
All right, that's Landon Swan breaking down the data for us on NVIDIA. I mean, all pretty positive. I mean, they were ahead of the game as far as their data goes over the last couple of years. Now they're starting to see a little bit of flattening out, Kevin. But how do you want to look at this one? Because implied volatility at or near 52-week lows at this point.
Yeah, well, because the stock has rallied so much, right? So I don't know. How do you trade this where you're not just exposing yourself to incredible risk, right? If you're long the stock right now, you have risk in your position. If you're trading a calendar spread, it can blow through a strike on a calendar spread without question.
Yeah.
I know that because it did it on the last earnings play.
Right. I think it blew past everybody's expectations.
Exactly.
Yeah.
But you have to log that information into your trading ideas.
Right.
So what I did, Tom, I went out till August 4th. So what's that? 4 weeks? 4 weeks, maybe 3.5 weeks. And I did the long iron condor, right? So this way it can move in either direction. I lined up the expected move for August 4th is right around $38. All right, is the expected move on the right hand column. So what I did, Tom, I bought the 470, 480 call vertical, right? Not much, just right in line with it's only $30 higher, so it's inside the expected move, giving myself more of a chance to happen. Then on the downside, I did the 425, 415. A little bit further on the downside, but not much. But how do I know that? Because the delta is exactly flat. It's less than 1 delta on a long iron condor. Now, to do this, it's not cheap.
No.
You're spending about $5.20 for this iron condor with the chance to make 480.
Right.
But you have reasonable movements. The stock moves $8, $9 a day. So
on a slow day, maybe.
On a slow day, yeah. When it's not in the news, it moves $8, $9.
Right.
So this thing can absolutely move. Will it? I have no idea, Tom. But if I'm going to trade this with a chance to be profitable in each direction, calendar spreads worry me because it could blow through my strike quickly. But this one allows you to hope for the gap. Yeah. You don't care how far it runs in either direction. You can run as far as it wants in either direction, Tom.
Yeah, NVIDIA has a beta of 1.77 at this point. S&P 500 beta is 1, right?
Right.
Anything above that, it moves more on a percentage basis than the S&P 500 on a daily basis. So let's break this trade down. August 4th weekly series, 22 days till expiration on buying an iron condor with implied volatility at low levels. Buying the 470 call, selling the 480 call. That's the call vertical, and then buying the 425 put, selling the 415 put, paying a $5.20 debit, $520 in risk. Your break evens on this one, Kev, 419.80 on the downside. You need it to go below there or above 475.20 on the upside on there. Max profitability outside of 480 on the upside and outside of 415 on the downside. So you need a move over the next 3 weeks, basically, on this one, Kevin. But when you buy something in a low implied volatility environment, this costs you less money, but you do have risk on this between those break evens at this point. Kev, wrap it up for us here on this long iron condor, because this is a strategy a lot of people don't know about, because we typically or historically have talked about selling iron condors to take advantage of positive time decay. This has negative time decay.
For all the lessons that you've gotten on iron condors, right, over the years from this network, from other places, when you get frustrated and lose money on an iron condor, you know who makes money? Long iron condors. And so, you may sit there, but every day this is open, you've got a chance for a big move and to be profitable. And so, this gives you, 3.5 weeks for that to happen. So if you want to sleep well at night, knowing that any big move you do well, like I said, if you were able to take this for $7.50 or $8 and take it off, if you get a quick move, it's a big percentage winner.
Right. If the market's open and liquidity is provided, you can maybe close this ahead of time if you do get one of those big moves over the next 22 days. But a good look at a low volatility environment, a long iron condor, where you expect more than maybe a 1 standard deviation move over the next 3 weeks. All right, Kev, we're going to take a quick break. When we come back, we're going to take a look at another stock that has earnings in the banking sector, and that's Wells Fargo. Underperformed the overall market this year into their quarterly results tomorrow morning. This one will be closely watched for the consumer. Coming right back.
I just chop it around up here. See if we get a head and shoulders a day. Got the shoulder and the head. I've been in and out of longs. Just ugly. Cut and handle and lift. Yeah, on the 5 minute. Yeah. Also holding nice support on VWAP. Back west up 1.5. The IV's come down on this thing since it's chilled out. Dragonfly. They just have a share offering? Yeah. You're happy? Happy that Mullen's up 6.5? Yeah, it's rallying a little bit. Look at that bounce perfectly off, off our line. 7.25. Yep, I maybe sold at the bottom for you. For the sacrifice. Coinbase up 9.2. Wish is up 10. Wish looks nice to 1090, $11. Trades left. I'm not messing with Mullen. I'm not gonna be buying back in, I don't think. Gotta dig a little too deep for that liquidity. Not liking it.
Where the estimates are expected to come in around $1.14 a share. That's about 54% higher than last year for the same quarter, which was around 74 cents. At the same time, their revenues are expected to increase by about 18% to 20.27 billion compared to 17.03 billion last year. So I think overall, you got to look at their liquidity position. Deposits have actually increased over the last year. That's a good sign for their liquidity coverage ratios. While at the same time, you know, Wells Fargo boasts a very stable and solid Tier 1 capital ratio of about 11%. So they are well within the ranges or boundaries from the standpoint of their competitors. And I think if you look at the way the banks have performed, look at the major commercial banks, JP Morgan, Wells, and so forth. They've actually performed quite well since those March lows.
Hey, George, real quick. When you look at bank loans and mortgages, they've actually pulled back a lot of their mortgage business. Is that going to be something key with home prices still on the rise, even though we've got interest rate levels where they are now, more than double from a year ago?
Yeah, that's the thing. I think at the end of the day, if you actually have a loan portfolio, and you're right, they did cut back on their existing portfolio by selling it down and paring it down, but also the number of loans
Supply rallying back up.
Because you got to think about existing homes; they aren't being sold. So the volume of loans, volume transactions have been down. I think that's something they'll probably indicate on their call. But at the same time, if rates are stabilizing or expected to stabilize, then when they mark to market the portfolio, that will come in better than expected. So that's something to keep in mind with rates. Again, stabilizing, having that loan portfolio with stable rates is actually a good thing, not necessarily a detriment.
All right, great stuff. As always, George, appreciate your rundown here at Wells Fargo. For you, Kevin, when you look at this company, you know, it's another one of those bank stocks that doesn't have a big anticipated market maker move priced on the option market, which we typically see or historically have seen in the banks. Your thoughts?
Only $1.40. This bank, much heavily scrutinized by, you know, the Senate Banking Committee. Obviously, Janet Yellen played a role. Other officials played a role. The largest percentage boost to the dividend post stress test was Wells Fargo. They raised the dividend by 16.7%, from 30 cents to 35 cents. So, you know, their full year, George mentioned the net interest income. That's 10% higher in net interest income. So that's a boost. you know, this is a massive bank that is actually doing quite well.
Yeah, now that they've got some of the clarity around some of the fines that they had, some of the regulatory issues that they had. So I looked at a strategy here that's a paid-to-wait type of strategy. Looked at a covered call on this one where for every 100 shares of stock that you buy, you sell an out-of-the-money call to the upside to offset some of the costs on that, create some yield going into this earnings report where implied volatility is a little bit elevated. So for every 100 shares of stock you buy, sell one of the August 45 strike calls. You're paying roughly about a $42.75 debit on that. So you're buying the shares in essence at a discount. And that 45 strike is about $1.40 above the current share price. So right at that one standard deviation move. Kevin, your thoughts on a covered call where you're still buying the shares, you still got $4,275 in risk on this one because you own the shares, but you could get to participate in the dividend if that's paid out also.
Right, and they just raised their dividend, so we don't want to assume, but it looks pretty good that they're going to do it since they just raised it.
Right.
Coming out of the bank stress test, it's 2.75% right now. They've got a relatively low PE, so this is a fairly healthy bank. The covered call should be everyone's entry into options trading. If you already have a portfolio, selling out of the money calls against your portfolio is probably a great way to introduce yourself to options trading. If you don't do it, you probably should at least educate yourself on how to do it. But
he's talking to you, Ace.
This is the most basic of options trading.
Yeah, and it is one of the more basic option strategies, but Kevin, especially if you own shares when you've got the market up so much
Overstock still
as
going?
it is right now, educating yourself on this type of strategy.
I know.
If you do own
From
shares in
the
company
Teddy in the
already,
window,
where
I'm
you
thinking
can
about buying
actually do
Overstock.
that, I think that's a good lesson.
I'm a believer in selling covered calls against it. There's a little bit of an art to it, a little bit of science, a little bit of art. You got to watch around the dividend and make sure you stay safely out of the money. But there's a lot of things to learn about that. But it's, like I said, it's a great way to introduce yourself to options trading.
A building block almost. Yeah. All right. Great stuff. All right. That's going to do it for Kevin and I today here on Fast Market. But stick around right here on the network. Next.
Eyes coming down a bit there. Just checking screeners here. And the Weeble one. The data farm. It's I don't know. Alright. Are you serious? That's on the first news article? Oh my gosh. Let's get nuts. Look at apps. Digital Turbine. Not bad. Overstock's options are nuts. Why? IV is actually quite low for how much it's run. Kind of enticing. All out the money weeklies. AMC's up 2%. GME almost back to even. Ah yes, BBIG. Forgot about this one. Well, missed an entry on there. BBIG looks good though. Kinda want some.
They lead the industry by a wide
And
margin. They also gave a capacity outlook of around 16% growth for their current quarter, which does imply about unit revenues falling between 2 and 4%. But what is unique about Delta to me when comparing it to the other airlines, which are still yet to report, of course, is of the 20 analysts covering this name, all 20 have either strong buy or buy equal ratings. There are no underperforms, no neutrals, no sells. I mean, very rarely do you see that.
You know, Jenny, I always wonder when it's like we adjusted it, and then of course it was we grew 20%. Then you know, like at some point, like I'm whatever height
Looking
I am,
for a BBIG pullback to VWAP
or whatever, but on an adjusted basis, I'm 8 foot tall. Like I just don't get that. It's just always one of those things. Like I get sometimes you have a significant kind of one-time impact things. You can strip those out. It makes sense. You're trying to make it comparable. But
Token.
you know, you make these seasonally adjustments. We see this in the macro.
Beginning of that.
Sometimes making it more confusing than it needs to be. Just give us the numbers, we'll figure it out from there. But we talked about this on Fast Market earlier this week when I was joining Kevin. We talked about how when this number came out, it wasn't just probably going to move Delta. It might move the whole industry, and you're seeing that today. This is a particular space, this sector, airlines, they do tend to move in lockstep based off the information that comes out. But you know the kind of day it is, Jenny, when we get earnings moves, and they're not even the big movers on our upvote, downvote segment. We look at Delta up about 1.6% in lockstep with the next one we're going to talk about here with this Pepsi, also up about 1.6% post earnings. And these are just like dwarfed by the names later on our list.
They really are, and I would say I would expect this out of PepsiCo, being its consumer staple nature in terms of its sort of.
Thank you guys for your thumbs up.
But it is
105. We got 30 likes on the day.
A modest move higher on a really strong report. But Pepsi did report some really strong sales growth and profits as consumers, they said, continue to shrug off price increases and spend more on their overall snacks. Some of those popular brands being Doritos, Cheetos, Fritos, which prompted then the company to raise its revenue outlook for the year. Now, their finance chief said that while consumers are pulling back on some of these bigger ticket purchases like cars, they aren't skimping on the snacks. He said they want affordable luxury because they still have some money in their pockets, and we are very much representative of that.
They're so slow.
If I'm going to fill my car up with gas, I'm going to then treat myself to Mountain Dew and a bag of Lay's. I loved that quote because I can very much relate to prioritizing your spending on snacks over perhaps some of the non-essential, non-exciting items. Now, PepsiCo's overall revenue did increase around 10% year over year to $22 billion in the latest quarter, surpassing estimates. The company said its North American snacks unit revenue rose 14%, while revenue at its North American beverage business rose another 10%. They did raise their forecast for a key sales metric, projecting that organic revenue will go up 10% this year compared to their previous forecast of around 8%. And at their North American packaged food business, which does sell like Quaker Oats, Rice-A-Roni brands, sales volume did drop by 5% for the quarter, while volumes at North American's beverage unit fell around 4.5%. So overall, we are still seeing some areas of declining figures on a year-over-year basis. But all in all, for the Frito snack business continues to be really their blowout, their standout figure that continues to grow pretty healthily.
You know, for investors, this has been a story as of late of kind of trying to tourniquet the bleeding. This is a name that tends to be sort of a slow and steady name, consumer staple, pretty consistent in its performance. It's had a pretty rough, time frame over the last few months. Post, sort of the middle point of May, where it peaked out just below 200 a share. All the while, the rest of the market's been doing really, really well. So I think it's been disappointing for PepsiCo investors as of late, but it's been a little bit more sideways the last few weeks and maybe the last month or so. Some earnings momentum now behind the stock. Maybe better days ahead for this one. Next one on the list, though, PanW. We're looking at Palo Alto Networks. This stock moving pretty healthily to the upside today, 2.89% higher. Another name that kind of quietly been disappointing the last few weeks.
Yeah, down about 7% off of its high, but this name still on a year-to-date basis is up over 72%, and it's had some really nice earnings reports this past year. I guess we wait and see until they report earnings at the end of August. But JMP Securities did raise its price target on Palo Alto Networks to $300 a share from $255, keeping an outperform rating. They said the challenging business environment within the firm's cybersecurity coverage universe persists, but cyber spending remains a top priority given the continued persistence of significant attacks, which is always concerning, obviously, when you read that, but obviously good news for a name like Palo Alto Networks. This name is fairly loved by the street. 37 buys, 6 holds, no underperforms, no sells. The average price target at around $246 a share is well below this JMP Securities price target, now at $300, and is slightly above where we're currently trading, but this analyst sees shares running up another $60. I mean, so some pretty significant upside, and like you said, this name making a more significant move to the upside today, up almost 3%.
Not to pick on this analyst, of course, no analyst is perfect, but all I can remember last year, geopolitical tensions at high, as it seemed like, with some of the uncertainty in Europe and in regards to Russia. And all we heard was cybersecurity stocks is the way to go. Look at this stock in 2022. It was terrible. Now we're hearing challenging business environment, and this stock's like just off of its 5-year highs, all-time highs. So it goes to show, not everything you read, not everything that these analysts say is always spot on. Take it at face value, take it for what it is. It's a piece of the puzzle, but it isn't the whole puzzle. And so it's been really, really impressive to watch this stock bounce back. But as I said, a little bit of weakness the last few weeks is there's been this sort of internal rotation in the market, maybe out of some of those tech names into some of those underperforming, more cyclically focused names, some of the names you'll find in, let's say, the Russell 2000, for example. But the next one here is this company that was very much in the conversation, all things metaverse and sort of future when it comes to really, really impressive kind of graphics work and things, and that's Unity Software, stock ticker U. I always love when they're just a single letter stock tickers.
I know, keeping it simple, and this is our best performer of the 4 names we're discussing off the open here, up 7% now on the day, and this name also getting a nice lift this week, up over 16% now over the last 4 trading sessions alone. Now, they did announce the launch of a new tool designed to help the gaming community moderators identify higher risk users and incidents. This is called Safe Voice, which is of course the name of this new tool, and it's activated when players flag instances of toxic or disruptive behaviors. The new tool, which they said does use machine learning algorithms, also monitors for behaviors or activities in the game that could be indicative of any sort of toxic event, such as players muting another player or abrupt exits. I thought that sounded so interesting. So they're basically trying to make the gaming community a safer place, I understand, to be. But when I look at this name, you see the analysts a little bit more split. This is one that's been caught up, I'd say, in a lot of the momentum with some of these names, like you've been saying, Alex, that have been beaten down this year. I mean, they have 12 buys, 11 holds, 2 underperforms, and 1 sells. So it's not like the street has a super strong conviction on this name, relatively more neutral to slightly bullish.
I mean, I hope they got some really strong processors. I mean, there's a reason, there's several reasons I don't play these video games anymore. But I can tell you, maybe I'm just bad at them, but it can be a toxic environment you're playing on those video games, especially those competitive ones. So all jokes aside, though, sounds like something that the street likes. Obviously having a really nice day today with this one. But Jenny, if we kind of narrow these down, obviously 2 of these names, we just heard the earnings. We're getting that reaction now. So when I see that, I'm kind of like, okay, we'll see where things go from here, but that's the news. It's out. You can kind of consider post-earnings trades or post-earnings analysis, but not necessarily going to be a ton on the horizon maybe for those 2 in terms of catalyst. However, the other ones, non-earnings related moves, potential earnings catalyst down the road, to me, those 2 tech names stick out a little bit more, and they're moving more today.
Yeah, and they're seeing it, like you said, some significant upside. And like we do have Palo Alto Networks reporting at the end of August, but then Unity is reporting the first week of August, which is coming up rather too quickly, I'd say. So we'll dive forward into those upvotes. We'll be looking at some examples.
No way, Adam Aaron's mine.
Unity Software coming up next. Stick around to Next Gen Investing. We'll be right back.
I'm not seeing it here. Is that brand new? You can't pump AMC or APE. Might as well pump HYMC. Look at SPY climb all the way back up there. Making an engulfing candle. About to get stopped out. It must have come out this morning on HYMC. Up almost 12%. Yeah, 8:30 this morning. I didn't know Blink was on that list. When did they hire them? Totally forgot about Blink. This chart actually looks pretty nice. Hmm. Where's my stop? Didn't get triggered. What the heck? Should have. I don't get that. That was weird. Needs to.
$10 wide strikes available in these particular expirations. So you'd be limited by strike availability and, of course, the expirations that are on the board. But other than that, I mean, if you're more bearish, you may look to the put side, more neutral, maybe more at the money calendar spread. It can be customized as fit for the particular investor. But again, 330 in risk, not accounting for transaction fees on this one, a strategy that benefits greatest from a move right to the strike. So in this case, that's 270.
Right, now to shift gears here, but not too far. Another name in the tech space, that is Unity Software, which of course is one of the largest companies that operates in this 3D world. And they did announce this tool to limit some toxicity on gaming platforms today. Rick, I'm curious your thoughts about this because you are more of a gaming expert than
They're kind of
myself.
inverse head and shoulders here
I'm
now.
sort of joking, it's not like the fun of the game.
Market's so
but
choppy.
Obviously, read as a positive today because this game is getting a nice move higher. I mean, shares are up considerably on the session and holding on to those gains.
Trolling people is a time-honored tradition in video games here, but
exactly.
I can understand, you know, wanting a little less toxicity in some of these groups here. That
Nicola breaking out.
Looking at the chart here, we can see
It rejects that
is a
$2 level.
Channel that we've been in since our last earnings event here, with another strong move upward today. And what's notable about today's move is that we broke above the 45 mark. That's about where price topped out here and here. So we're having a nice strong candle. We're up about 7% on the day still, backing off a little bit from the intraday highs, but still nothing to sneeze at here. So we can see as well that price has risen above all three of our moving averages here: yellow 21-day, orange 63-day, purple 252-day exponential moving averages, which are starting to trend upward, with the exception of our longest term one. Our purple 252-day has transitioned from trending downward to more flat, which is still an improvement here, but it's not quite trending upward yet. So we're also moving from an area of high trading, this large volume node that formed between about 27 and 40 or so. We've moved beyond that point. Now we're moving into an area of thin trading. So beware of fast moving prices. There's not a lot of support and resistance levels to go on here if we start moving further upward based on the recent term price action here. Now, RSI, we had a similar situation that we had in our last chart here, where we're seeing some bearish divergence. Price was making new closing highs. RSI was trending downward here. The big difference with this situation, though, is that we formed a trend line and we broke above the trend line. That's why it can be good to use these trend lines here. It can be a signal that perhaps if you were making a short play on this name, that would be the sign that perhaps it was starting to go against you, especially when it's coupled with a break above resistance here. So that would be probably the signal that you may want to get out of that trade, and it's not going to work out for you. But you know, we can see as well, we did cross into the overbought area earlier today, which is a sign of strength. We aren't quite there yet. We've backed off enough so that the RSI has moved out of that 70 threshold there. So be on the lookout. If we are able to close above that, moving into the overbought area would be a good sign for the bulls here. So to zoom in a little bit on our chart and assess some support and resistance, the 49 level up here, that was the site of some old highs from back further in the year. That was the only real thing I could see in terms of fairly recent price activity that could provide some resistance for us there. Then possibly our channel, this line here that we've been looking at, that would take us around maybe the 52 mark or so for some potential resistance. To the downside, we've got quite a bit right here. If we do fall back below 45, we've got our 252-day and 21-day exponential moving averages also in concert with our trend line coming in right around the 41 level. So that would be some extra weight behind that price level because we have so many indicators converging at the same point. So watch those levels for the near future.
And of course, we'll be watching this name into the close. As I spoke a little bit too soon, we are giving up some of those gains, at least in real time. We'll have to see, obviously, where things settle when we close out today. But appreciate all of the insight, as always. Rick Ducat, our chart master. So now in trading this name, Alex, considering the fact that we are up 120% off of our 52-week low, and it's having a really nice week. It's up over 16%, up 7%, of course, in today's session. Walk us through then another bullish example trade leading into some of today's momentum and multiple technical indicators converging here, like Rick said.
Almost FOMO-like in its reaction here, and I think it goes to show that some of these growth names, these high beta names, when they start moving in a direction, they can move a lot of ground very, very quickly. They can cover a lot of ground very, very quickly and have some pretty massive percentage moves. And so looking at a strategy that would benefit from a pretty large move in this name over the next month or so going out to the August expiration. You mentioned the earnings
Nicola trying to break that level.
in the early parts of August. So a potential catalyst that may work for or against this strategy. So bear that in mind. But looking at buying a call condor, essentially this is two call verticals being combined into one four-legged trade. One in which we buy a $10 wide call debit spread, the other in which we sell an out of the money, further out of the money, $5 wide call credit spread. And so the whole package, if done for a $3 debit, would be the risk on the strategy, which is $300. You find the break even by looking at the most expensive call of this bunch, which is the one with the lowest strike price. That is the 45 call. You add that $3 to it, you get to a 48 break even. From there, that's where things get interesting. This thing can expand to as much as a $700 profit, as the risk profile will show. That is basically where this thing plateaus out as a max profit potential that stands between $55 and $60 in price performance at expiration. From there, though, you can overshoot this. So this can go, if it goes through 60 and then ultimately through 65, the trader who would be looking at this type of a strategy would stand to give back upwards of $500 of those possible $700 in profit. And in that case, it would level off for a $200 max gain, not accounting for transaction fees above 65. So no upside risk, but it can, of course, overshoot, in which it does go beyond the max profitability zone, which again is between 55 and 60 in this case, Jenny. All the risk to the downside, break even slightly above the current share price. So this is a strategy that would require some movement to the upside for the investor. You know that means it's not necessarily a high probability trade. It's more speculative, but it is risk defined. And if it does fall below 45, $300 is the max loss, not accounting for those transaction fees.
And of course, as always, also important to keep in mind for all of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now coming up next, it's time for FOMO. So we are looking at some of these online travel companies, Airbnb, Expedia, Booking Holdings, Barclays feels more optimistic about all three. We'll discuss that note more coming up next.
GME, little pop to VWAP there. Same with AMC. Oh, Nicola broke above it. See if he can hold. Look at Nikola trying to hold above there. Impressive. %50 on Nikola. Rocket Lab had a breakout today. This is like one of the flattest days we've had on barbecue for a while. Barbecoating.
On specifically Booking versus some of the other names, but also they sort of listed these all as a whole into the second quarter print regarding the online travel space. Now, these companies, Booking and Expedia, will report August 3rd, so we do have about less than a month until those reports. Of these three names, though, Airbnb is the clear best performer. It's up 63%. Expedia is the worst, up 36%. Booking's up 41%. But Barclays did raise its price target on all three of these names, raising Airbnb to $136, raising Expedia to $137, and raising Booking to just over $3,100 a share. All three they maintained an overweight rating on. So all three of these price targets do imply some healthy levels of upside from where we're currently trading and names that have performed quite well. And I just like that this provided another viewpoint on some of this credit card spending as we look into the latter half of this year, especially considering we're getting airline earnings right now, or we will get hotel earnings very soon. And I just think it's important then to survey multiple analysts, because it does seem to be there's this like looming fear that travel will start to slow after seeing such strength over the last several years. It doesn't look like that's necessarily going to be the case in terms of Barclays, though.
Vrbo was the brand I was looking for, owned by Expedia, sort of an Airbnb competitor. So to me, Expedia seems to be the one that's almost a blanket exposure here. You got the kind of online travel agency as well as the, of course, kind of short-term vacation rental marketplace at the same time through VRBO. But, you know, Jenny, I still think that this space, the info is murky. I was reading something about discounts, discounting being available for, you know, trips to Disney around the holidays in December. It's supposed to be like a peak travel time. So if places like Disney are a little bit worried about how things are shaping up, I think there are still kind of murky, maybe clouds covering this space a little bit. But along the lines today, I mean, obviously a ton of positive reaction. 3% move to the upside here, Jenny. I think it's pretty clear that the fear of missing out, at least today, is an upside move.
I definitely agree, and I think that the fear of missing out for a lot of these names in terms of this week is definitely to the upside. I mean, these names have been on a nice tear. Airbnb and Expedia up 7% just week to date. Bookings up 7.5% week to date. The airlines have also done relatively well this week. I know the broader market has also done well, but these names have quietly crept back up after seeing a few months of some disappointment. And we had a nice start to the year. We since saw things falter amid some overall turmoil with the financial sector, and now we're seeing things pick back up. So good to see that, at least as far as the street believes, these names look relatively strong. I do agree. I think that eventually we'll have to stop seeing this travel boom. It'll have to start to slow, right? I mean, airfare prices are ridiculous. Hotels are ridiculous. Discounting to me sounds like a win for us, maybe less of a win for these companies. I miss the days when you could fly to like Florida during the pandemic for like $50, but those are all no longer the days. So now walk us through what you're thinking for an example trade today. Looking at Expedia, I believe, leaning into some of this bullish momentum while also then being more risk defined, just considering the fact that these names have been on a nice tear this week.
Yeah, Expedia, one of the names they have at overweight in regards to this note from Barclays. So leaning into that bullishness here a little bit, but neutral to bullish because it's made a pretty impressive move already week to date, as you have said. So we're looking at selling a put vertical below the market here, going out to August, simply selling the 115, 110 credit spread for $1.50. Means $150 in max profit. $350 is the max total risk here. Break even, you simply take that $150 away from the $115. You get to $113.50. Neutral to bullish, as we said. If we look at the risk profile, elongated Z, in which we start in that max profitability zone. Right now, Expedia is just under $120 a share, and so you got just over $4.50 in cushion in which this stock could actually sell off, and this neutral to bullish strategy at expiration is theoretically still at max profit. And so that's sort of the beauty of these premium selling strategies. Of course, it does take greater risk than the maximum reward. $350 compared to $150.
Buy climbing up here little by
A
little.
little bit over 2 to 1 in terms of the risk. So if there is a pretty substantial sell-off here, $350 is the exposure below 110. And of course, the other downside would be, say Expedia takes off on a rocket ship from this 119.60 up to 135, 140. You can only make the 150 here associated with the credit received. So defined risk, defined profitability, but in exchange for that, a little bit higher probability of success.
Right, I think that's a great conversation and great look at some of these names that have seen a nice day and a nice past couple of trading sessions. But that does it for our FOMO segment. Coming up next, though, we will not stray too far away from the travel conversation. We will be looking at Walt Disney, but focus on its leadership here after they extended CEO Bob Iger's contract through December of 2026. We'll discuss that more coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Oh. Nicola's starting to waver up here a bit.
52-week highs, not even all-time highs.
Yeah, that's the thing. We got to look at the perspective. I know it's higher this week. It's actually looking rather constructive from a price standpoint, but there are some analysts that are still actively overweight this stock. You look at Barclays, they actually moved their price target to 19 from 16, and they do maintain an overweight rating. And I think one of the things they're expecting when the company's going to be reporting earnings coming up is they don't see many risks to surprises. In other words, if you consider what's happening in the financial space, we know that there's been some issues with credit quality, particularly in volumes for credit. Volume has been down because of higher interest rates. Well, at the same time, we know there's some issues with balance sheet risk affiliated with some of the regional banks. Well, one thing about Affirm is it's not a bank, nor is it a non-bank financial company. It's essentially a payment processing and transactions-based business. So it's really a technology company, and I think that's one of the reasons why the stock is higher on a year-to-date basis, but it's still down about 20% over the last year because of the profitability profile of the business. So I think if you consider some of the cyclical issues that we've had in the economy, which haven't really manifested or played out, a lot of folks are expecting to be in a recession now, but there's actually some positive elements to the economy, and I think that's shoring up some of the elements to the consumer, and that's where you got to think about Affirm, especially when it comes down to buy now, pay later. The other thing is the business itself has been expanding aggressively. That's really hurt its profitability profile, but they do have major partnerships with very large retail companies. You got to think about Shopify, Amazon, Walmart. All those three giants actually have partnerships with Affirm. So Affirm's not competing with those names; they're actually partnering with them. I think, which is a positive catalyst.
Definitely. And, George, I was seeing something the other day, and it was something like, the market's actually, I want to say it was like 3% higher than when the Fed began its rate hike cycle. And it's probably not what many would probably remember it as. And it's been pretty incredible to see. But there's a lot of the parts of the market that aren't that way. And this is the example of the type of companies that these higher rates seemingly have had a tremendous impact on. And it's been this non-profitable, with no profits in sight, growth technology that the market was just chasing and chasing and chasing higher November, December of 2021, to the point where some of these valuations, quite frankly, were so in the stratosphere that it's almost unfair to these companies to even be compared to that, because this company is far more fairly priced here. It's done better over the last few years. And if you look at the price performance, George, it looks like it's like one of the worst stocks that you could ever find.
Yeah, that's the thing. I mean, you got to think about where the growth has been in the stock market. It's obviously been in growth stocks, particularly technology. We know the NASDAQ is higher relative to the Dow or the S&P. Then you also have to think about high beta growth stocks, those companies that aren't profitable, that haven't necessarily proven themselves on a financial basis. I'm not saying Affirm hasn't proven itself as a business, because they've actually increased the number of transactions and volumes and partnerships that they've gained over the past few years. But the financial profile of this company is still not good on a relative basis to some of the more stable technology names, but it's a high beta stock. And with that said, when you see interest rates stable, and that's what we've seen in the past 6 months or so, in other words, the rate of change in interest rates is decelerating or slowing down, that's a good thing for nonprofit-based companies like Affirm. And I think that speaks to why the stock is higher on a year-to-date basis. But at the same time, you got to think about economic conditions. They actually are pretty sound right now. Now, consumers may be still stretched from the household budget standpoint, but that actually might be a good thing for companies like Affirm, which, again, provide flexibility and payment solutions for people who are looking to buy something that's more expensive than they can afford paying cash for, but also to customize the terms and how they pay it back. So, you got to keep in mind, major trend reversals, still not there for Affirm, even though it's higher, pretty high, or much higher than it was on a year-to-date basis. Looking around $18.50 is potentially a major trend reversal. Also, the stock is still trading below its 50-period moving average, so keep that in mind as well.
Yeah, George, I think a really good look at Affirm, and I think it's important to be skeptical a little bit when you see moves like you have here, although I guess things have improved, but all in all, just not the same name we saw when it was getting so much love during the pandemic. And I think that consumer risk is something to consider here. And I've used it all too often. I'm all too familiar with the way some of these payments don't feel like they ever end, even though it seems like a good idea at the time. But we will leave it there. Appreciate the insight, George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing for this Thursday. Coming up next, we have the Watch List with Nicole Petalides.
I don't think I restarted the stream. No. Nicola had a nice little breakout and retest there. We had a day trade and wanted to scalp it. I think it's got room to run up to 2.8. GME. Are you back in GME? What's your weird luck? Coinbase up 15 now. Wow. Almost back to 100? Holy smokes, man. This thing was just at 50. I remember I had like 45 or 50 strike cash secured puts. Ugh. Wow, what a big break. Would keep going too. 115. 150. Jeez. It's already like pretty overvalued though. You've made money on steadily? Nice. Are you still in it? I thought you closed. You bought it at 9, sold, bought it at 9, sold. We're here? Where'd you sell? And where'd you buy again? Well, several times. You just keep trading it. That's good, man. Yeah, find a stock you like. You like to trade. This one, it does trade pretty smooth. Yeah, for an energy stock, it has pretty good volatility. All because you messed up the ticker. That's awesome. You like the company because you made money off of it. It's giving you emotional sentiment. After you've traded a ticker and it's done well for you, anytime you hear it, you just have good dopamine hits. Makes you want to trade it some more. BBIG never pulled back to VWAP. Nicola's still going. I'm out of day trades. Yeah, I liked this on the breakout and the pullback. Little retest here. I think $2.08, 80 cents. Maybe today. What is the SPY doing? Wow, pop on SPY. Oppo. What a crappy, choppy day. Literally just stuck in a 2-point range, 1.5 point. Dude, coin went crazy. $1,800% on these contracts. Yeah, these are 7 cents. They're $3.35 now. Wow. New high of the day on SPY? Really? That's what you're doing now? Yeah, now SPY's waking up. Wow. 2 o'clock. Coins ripping. Nicola 61% now. SPY's ripping. I had this inverse head and shoulders. I got stopped out right here though. I was late on it. Sucks if you don't get a good entry. Oh yeah, JNS. I don't know. No, not earnings. This is from buy hydrogen. Mixed with momentum and maybe some short squeezing. Buy hydrogen and transport trailers from Biotech. Definitely has a high short interest. Like SPY's going for that 449 now.
Want to hear more about it? And Mies Schneider will get us set for the NASDAQ rebalance, earnings season, and so much more. Our panel will highlight this week's inflation data. We'll be looking at that. And Jeffrey Kleintop standing by with the latest global economic picture. So much more coming up. Stay with us.
I'm so late to this. Bullard's leaving the Fed? What? No more bearish Bullard? Oh, markets are gonna rip now. That's probably why they broke out here, huh? Because Bullard left. You're Nicola? You're a little late on that, but I think it still has upside. 2806. Probably the very top I'd hold this thing too. You're taking profits along the way. 23. And put your stop loss just below the breakout there. No, I'm not muted. Most boring party I've ever been to. Bye, Rippin. Nicola's kind of consolidating here. You don't want to see it break this trend, especially with a shoulder over here. Consolidates over to about this area. You want to see it to start to climb again. Good SPY go.
Been a very different story. What are you watching when it comes to China?
You know, China's economy, we know, has stumbled a little bit after its initial recovery from the reopening this year, along with heightened U.S.-China tensions, which, despite all the visits, don't, Yellen here visiting in July, Blinken in June, some talk just the last day or two here with Anthony Blinken and his counterpart. But the tensions are still weighing on the stocks. But today, we've got international stocks, again, outperforming U.S. stocks as they've been doing this year. And, when you look to Asia, I think two standouts are no longer China in terms of growth. It's really India and Japan. I'd note India probably today maybe just surpassed China in terms of overall population. The expectation was that would happen in July of this year. Could very well be today. Just another sign that India is beginning to overtake China in a number of ways. India had the best performing stock market in the world in the second quarter as the world's kind of de-risking not re-risking their portfolios away from China and into other Asian tigers. India is doing fairly well with regard to this, getting a big manufacturing base now, trying to grow that. Apple's expected to move some iPhone manufacturing to India. Japan's doing well. Also, Japan, the best performing stock market this year, the second largest stock market in the world. So we're seeing this opportunity that I think a lot of investors are missing in these Asian markets that are really doing very well this year, while investors are still kind of very myopically still focused on the U.S. market.
So at this point now, maybe China's not our big story anymore when we were talking about that, because that PPI print came out and you're seeing with wages and overall some weak deflationary things happening there. So with India growing the way it is, the population growing, for investors looking to Japan and India seems to be the way to go, right? I mean, is there anything else that we can say about this so that folks can
190. These are 5-minute candles, yeah.
Yeah, again, I think this is something that many investors have overlooked for a long time. And it's funny because, again, Japan is the second largest stock market in the world. It is the largest weighting in the MSCI EAFE index, 22% of the index. And generally, this
it could be a little more aggressive
ETFs and mutual
because
funds that invest internationally.
This trend did get a little steeper here.
Investing internationally in one of those broad ETFs or mutual funds, you do probably have a lot of Japan exposure.
Give yourself a little more room.
This year, Japanese stocks are up well over 20%.
With this trend,
outperforming the U.S. market and are doing so again today. I mean, it's nice that U.S. stocks are up about 0.5%. Japanese stocks are up 1.5% today. Again, continued outperformance there on changing sort of reforms to businesses. The Tokyo Stock Exchange has changed some of its requirements to list on that exchange, forcing companies to boost their price to book ratios. That means they're using a lot of cash to buy back shares. That's been great. Japan has been seeing better economic growth than many of its group of 7 counterparts, including the U.S. this year on a GDP basis. And they're also seeing this reallocation of supply chains that's really benefiting them. So a lot of things lining up. Similar story for India, much better growth. In fact, India is expected to grow 6% GDP per year for the next 3 years. Compare that to 2% for the U.S. You can really see where the growth is.
So at this point now, and thank you for that, I wanted to circle back to something you had said at another point when you were looking at labor, and you called what happened with the supply chain and lack of supplies and then the supply glut, and then you were saying maybe we would see something of the sorts pertaining to labor. Where do we stand on that, whether it's abroad
looking
or
for it to
here
break
at home?
out here.
Yeah, it's still very
The bull
early
flag
in
it
the
made.
from shortage. We're starting to see it show up. The jobs report on
You ready for it?
All right, we're gonna
Emotionally?
right there, Jeffrey Kleintop. We're always thankful that he's able to be.
You don't want to dip past like
just a few
anything
technical
too substantial.
issues there. Jeffrey Kleintop, Charles Schwab.
I mean,
Always
really
awesome. Thank you. All right, coming
past
up, we're
here,
gonna be
unless you're
diving
wanting to
into
hold like
Amazon's
through
latest Prime
big
Day
dip and hoping it
sale.
comes back
So
up
what did
in today.
consumers do?
You might as well
Did they
reposition
favor buy now, pay
because
later?
you're getting a scalp.
All the
Might as
details
well close,
coming
take
up
profits,
next.
and re-enter at a dip. Basically, I would ride it until this trend is crossed over. Could even look at the 9 moving average there too. Kind of also respecting that. Take some at 23.30. Purchase 23. Little drop there on the SPY. Silvergate did, yeah. Banks can go bankrupt. I mean, it's in their name. Coinbase up 17. $101. There you go, Neg. Yes. Neg woke up. 12.5%. Whee! Pretty good volume there too. See, there's no way I could have caught that. Please, GameStop, be buying Neg. Amazon rallies in record Prime Day. Did the Prime Day numbers come out or something? That causing this rip on Neg? Nice, those are up 153%. Nicola's still just consolidating here. We do have a shoulder and a head though. If it breaks here, probably gonna build a shoulder on top of that breakout. Come on, Neg, hold that support. Zoom is above that line I drew, but it's not like a real clear line. The other one would be a much better spot. Ah. Teladoc getting up to that resistance again. Nicola coming down a bit, see if it bounces here. There you go, there's your bounce and support. Not sure why Neg woke up. Still consolidating here on Nikola. BBIG. That was it. That was the move. Wasn't to VWAP. Birds is up 14%. What? Is it possibly setting up a good trade? Le Birds?
The ego on you.
Thanks for the gifted membership, Ace. Christine. Pretty well deserved. I think she's around a lot, lurking. So, Christine, you've been summoned. Come thank Papa Ace. Kiss his hand. Thank him for the membership. Get on our Discord if you're not already. And DM me, I'll send you a happy crew roll. Good. Now, Teladoc has a more clear resistance to me. So, see what happens here. I could have held Zoom longer, but it was rejecting right at the resistance, so looking better now. Probably want more time on this one. Dude, SPY, man. Ugh. What a choppy mess. Nicholas really testing some patience here and consolidating for like 30 minutes. 45 minutes. I think it'll break out to the upside. Once it hits the top, you're gonna see a big rush of sell orders. Maybe not a top, but I don't think that's just gonna come after a bull flag. There you go, Nicola. About to do it. Wish is up almost 12. Wow, we've got some runners today. Birds, Coin, BBIG, Wish. Oh, I just got filled on beyond. Back into beyond. Nice, I like that bull flag. Take it. Kind of a starter position. What is it? Oh, it's not that small a starter position. Got beyond August 19 calls. Jeez, peg knot. One just got blink too. Got filled on blink also. How's all the fills coming in? Got blink August 8 calls. Been a while since I've traded blink. XRP wins case against SEC. XRP is not a security, that's why it's ripping. Thanks for the info, Victor. Nicholas still testing the patience. No share data available. It was... We looked back yesterday on stream. I don't know if you saw that, but there was like 2 weeks at a time where it hadn't updated in January. Bank rate heard of vault swap on itself, I'm not sure. Here you go, lift. Neg. Coming down a little bit. It's okay. You can break out tomorrow. It did the whole range today, look at that. From the support all the way past resistance. Yeah, you're at 35 minutes of consolidating here on Nikola.
The ego on you.
Thanks, Ace. Appreciate it, man. Cameron. Praise Papa Ace. Nice. Well sniped. Well deserved. Thanks for the support. Thank you guys for your likes. We're 37 on the day. Got some runners today. Pretty slow day, but definitely some rippers. Nikola for sure. BBIG is nice. Wish is up a lot. Nag is even waking up. 240. See if we get this head and shoulders completing. Getting us to the low a day. You're gonna get close to a move here on Nikola, I think. As it gets closer and closer to this diagonal support, it's either gonna flush and break through or bounce. Oh, sorry. But you can tell from the trend back here, this was the rate of acceleration. Then accelerated here, but that was too fast for it, so it had to consolidate. Oh, flushito. I mean, yeah, it's looking good, but we'll see. You've got maybe the most, what, 15 more minutes? So power hour is going to make its move. If not sooner. Coinbase 18%. Exit 10. Slowest scalp ever. Now, if you had a good entry on this would be easy to hold, but I don't think you did. I think you might have been late. We were waiting for the breakout. Finally broke out. Then you had nice 3 candles of retesting where you could have grabbed it. If you want to be safer than that, you could have gotten a breakout of the retest, which would have been here. But really, any of these would have been fine too. I mean, the strength is weakening, so this next pop will probably be last. We've got an RSI divergence here. Lower highs in the RSI. Higher highs on the price. MACD's flipped bearish. See if it bounces on the support. Oh, it's retesting it. Testing some stop losses. $57, yeah, okay. Investigates claims on behalf of investors. Oh, the shareholder suing GME? I want in on that. I wanted to sue. I didn't have a specific timeline, but when they tweeted MOAS, that's kind of like when my stopwatch started going. They tweet oops MOAS again. Or oops MOAS, my bad. Yeah, it cost me $250,000. Give me that kind of false confidence and hope. Zero claims and shareholder no part of it. Just an article. Oh, SPY, look at you. Look at you. That'd be good if GME got back on some short interest list. Get some volatility back in that stock. Oops, someone else was it that black kid that was running their Twitter? I mean, it doesn't really matter. It was from the company. It wasn't on his like personal profile. Market might want to rally and looking pretty exuberant. Power hour. Nicola's really getting close there. No, it wasn't one specific play. It was months and months and years of having this idea that I was going to be very wealthy under false pretenses. So, poor risk management. Yes, playing options, shares. But this idea of it all was going to be over with a crazy high share price I could sell at is what gave me the confidence. And that was definitely a big booster in it. And that other tweet they did right around the same time. High, testing the high almost. It's a work in progress, Cameron. It is a work in progress. I don't know, Ace. It's not looking too good here for Nicola. Needs to bounce pretty shortly. You don't want to break this support here. Yeah, gonna flush there, yeah. Oh, a little stop loss hunt. I don't like that it broke that though. Flashy flashito. 5K in share, yeah. Barbecue popping. Barbecue 30, 50. Broke out of its barcode. Up 3.5% now. Good eyes, Guts. Good eyes. And a flush. Just a little liquidity pump. Oh, a little bit more. 30.69. Insider info? One would only hope. Yeah, I'm not liking Nickel anymore. I think it'd come back down to $2. Or even VWAP. And profit taken into. You might have a bounce later in the day, like end of day, but I wouldn't hold for that. I'm prepared to go head first in 100% barbecue position. Hear the words. What words do you need to hear, Cameron? I like turtles. Ah, SPY. Really wrecking my streak today, SPY. This chop was... managed it good. By the end of the day, I just ran to patience and focus. I think, I don't know. No, my stop didn't work, and so now I'm sitting here riding this thing. I'm gonna manually do it. Wait, was it this time? One time during the day, my stop just never even triggered. I just saw it go right past the price. Nice ace. Alright, 5 minutes to power hour.
Right, with that moving up of a cut, telling folks that the
there you
Fed
go,
should
Christine.
Slow down after the one
Yeah,
hike.
very low
So
volume on barbacoa.
bullish for investors, particularly for riskier assets such as what?
So short term, the dollar going down is going to lift everything. The dollar going down has been the best catalyst.
That's how all Moases start.
As of late. So the last year,
all the ones I've been in, just this month even, they've all started that way.
Really up, everything else was down.
Really surprising.
Year, the dollar's down. It's probably the only thing down basically now, other than the VIX, and now everything's up. And it's amazing to see. You don't have to be, that differentiated in terms of your equity selection. It's amazing. It lifts all ships almost, but quality tech is our favorite way to play a weaker dollar. That's going to help foreign revenues. That's going to help disinflationary impulse. Well, that's what we're seeing as well as the weaker dollar. The two are connected, and that's lower inflation is going to help the growth side, the quality side a bit more than the value side. So we like quality there. International is rallying the most on the weaker dollar as well, just on the currency side. But we struggled to love the international side because it's a lot of cyclicals and more value oriented that typically does not like a global disinflationary environment. But short term, it's lifting everything really.
What do you think about St. Louis Fed President James Bullard stepping down basically immediately? He'll leave in August, but he's always been someone who's been outspoken about more hikes being needed to tame inflation. Do you think that would affect the Federal Open Market Committee's decisions?
Not too much. He was always really an outlier, but he used to rattle the markets. I mean, he used to just come out, on CNBC or the media and just throw out really hawkish comments. The Fed right now, I think, does need to have some hawkish members to keep.
That's why the market rallied the bit it did. Buller's leaving. All bit.
Alive. So they've probably got to have some people kind of step up and take that baton.
He can't handle all the perma bulls in there.
Fed and FOMC members are going to change their tune, and it is maybe a bit of a sign of the times. He might be saying, "All right, my job is mostly done here. I can move on with my career."
Right. It's great to see you. Thank you so much, Matt Miskin of John Hancock Investment Management. Thank you so much.
Thank you for having me.
And folks, just a quick note on Coinbase. it has hit $100. As we were speaking here, I see it's up 17%. This was on the news pertaining to Ripple and the judge's ruling, and has been
for
viewed
Ripple,
at
that
least
makes
as
sense.
a partial win for crypto. Check that out. That's going to do it for me here on the watch list.
That's pumping a lot of stuff.
Thanks for joining us. Keep us right here. Market on Close is next.
Kind of got an inverse head and shoulders here at the high of the day on SPY. Might have a pump into power hour. Ace sold Nikola. Closed out of Nikola. New high of the day there on the SPY. Yeah, it's an egg. Go. And a flush on barbecue. What's this bullion shared? The docket dropped at 12:15. It's to the judge. It says the above captioned debtors and debtors in possession by and through their undersigned counsel requested the time period to notice a hearing on the debtor's motion for entry of an order authorizing and establishing procedures for the compromise and settlement of de minimis claims, approving the form and manner of notice of settlement, granted related relief as required by FedR Banker be shortened pursuant to FedR Banker, and respectfully submit. SPY's ripping up here. Yeah, you had that inverse head and shoulders. Only a matter of time. Whoa, sorry. A shortened time hearing is requested because the debtors commenced. I don't know why I'm getting feedback. The debtors Where am I? The debtors commenced these Chapter 11 cases to implement an expedited process to maximize the value of the debtors' estates for the benefit of all stakeholders. That sounds pretty bullish. All stakeholders. I'm pretty sure shareholders would be included with that. Barbecue's coming down. The debtors have commenced an orderly and value maximizing wind down of their business and intend to file Chapter 11 plan shortly. Okay. In connection with their efforts to wind down their business, the debtors have analyzed de minimis claims asserted against the debtors and, if applicable, any related cross-claims held by the debtors. Through the motion, the debtors propose to implement cost-effective and streamlined settlement procedures with respect to the compromise and settlement of the de minimis claims. The debtors believe that implementing the settlement procedures as soon as possible will enable the debtors to expeditiously resolve the de minimis claims and realize value for the debtors' estates. Given that the relief requested in the motion is procedural, the debtors do not believe that any parties will be prejudiced by the request to shorten time. Still, it mentions maximize value for stakeholders. No, maximize the value of debtors' estates for the benefit of... Okay, for the benefit of stakeholders. However, how much is that? What is that? Anything? Buys ripping there. Broke out of that level. Wow, wow. What do you think about that, Cameron? By moon missioning. That's because I saw it too. Didn't trade it right. Mullen, you're back in Mullen? Yeah, it is kind of rounding a bottom maybe. In a bigger downtrend though. Just a generic boilerplate type reason for shortening time hearing. Yeah, could be. Nothing specific. It's true.
And you know there's major conviction here, buying treasuries, pushing yields down. But if we do see some of the bond rally fizzle and the drop in yields kind of calm and maybe go sideways around 3.7, perhaps there's still a conversation we should be having then about risk to the upside for yields. That's just kind of an if thing to put on your radar here to watch for. Other than that, not much else to say. High beta leadership, and that is a category with quite a diverse holding base now. If you look at the SPHB ETF as an example, you got reopen trades in there, Carnival, you got the AI stuff with NVIDIA, Tesla, you've got consumer travel stocks, Caesars is in there, cruise lines. So it's a group that swings a lot. Right now it's swinging to the upside, but it does also reflect a bit more nuance than some of the highly concentrated AI strength earlier this year. Arguably a more healthy market rally. Got Renita Young and Zed Francis standing by as well, joining us here at the top of the show. Kevin Hanks with us. As we go back to this morning, let's start there, Kevin, because jobless claims were better than expected. We didn't get a bond sell-off, and that seems like a sharp difference from even just a week ago.
Yeah, listen, I think you can't ignore what's happening in this market right now. A CPI, PPI release of that data has been friendly to the markets. We're getting good economic data. The earnings so far in Delta and PepsiCo have been strong. Delta's earnings were off the charts good. So you've got lower dollar, lower yields, all favoring stocks, Oliver. But, and here's a but, whenever things get too good, you got to watch crude oil prices. Now trading over $77. In Wednesday's CPI, gasoline prices were up a full %. And that CPI, if this continues in crude oil, you're going to see that number go higher as well. And by the way, boiler up, James Bullard. Alex Hinks, my daughter, is a Purdue alum.
Okay, I'm already catching heat. Okay, how to feel?
Oh, you're going to get it big.
Yeah, I heard it was the Ivy League of the Midwest. I don't think that exists, but okay. Renita Young, jump in, save me. All right, stock-wise, helps when you've got upgrades on all the travel stuff too, right?
Yep, and I've been watching these three stocks lately. Barclays issued some bullish notes on Airbnb, Expedia, and Booking Holdings that has all three stocks rising today and raising their price targets as well. So let me take you through all three. For Airbnb, the analyst took this stock to $136 a share from $112. Now that's a few dollars below where it's trading at the current moment, right? But he has an equal weight rating on the shares. He raised the price target on Expedia to $137 from $113 a share. That's around a 13% move to the upside, keeping that overweight rating. Right. And Barclays says that the credit card data in the U.S. that Barclays has shows that leisure lodging spending improved in May and June from the lows of April and also versus 2019. And that further shows that the stabilization in the second half of June is coming. Or it showed itself strong, I should say, in the second half of June. But given the macro concerns in the second half of 2023, after this peak in the first quarter, Barclays prefers to stay defensive with Booking Holdings. So this company, it raised its price target to $3,130 a share from $2,960. That's around a 10% move to the upside, keeping the buy rating or the overweight rating, I should say, on Booking Holdings. Now, when you look at all three charts together, you'll see that Expedia year to date is up around 37%, Airbnb up around 63%, Booking up around 41%, but comparatively, it's the Booking chart that has a more steady trajectory up, and it has less volatility when you look at it right now. So that may be a good reason why Barclays prefers to stay defensive with Booking Holdings.
Kevin, what do you think when we see these stocks taking part? I mean, it is a pretty important part of this development the last couple of weeks, is it not, that you're seeing more energy, more excitement for some of the non-tech stuff?
I think it was actually holding up better than I would have expected.
You know, the markets plant seeds, Oliver, and I think this rebalancing, all you got to do is look at the heat map.
You might get one more little pump before close.
The NASDAQ.
I don't like the setup at all, though.
Those big seven names are crunching all the other names in the NASDAQ 100 over into very small boxes into corners, and I'm sure the NASDAQ realized that that's not sustainable. So that balance, that rebalancing of the NASDAQ has probably put a little thought process into some of the other stocks that are out there, both in the S&P and in the NASDAQ and in other places. So to see a nice, even though the NASDAQ, don't get me wrong, is having another strong day today and leading the market higher, people are starting to take notice that these stocks have run an incredible long way, Oliver. And though it's not today, I would expect, this rebalancing to put a little more focus on that. Will it stop it? I don't know. It doesn't seem that, right now this thing seems like a freight train, Oliver. But like Tom White and I said today on Fast Market, you never know where that little change in tone is going to come from, but it usually shows up.
All right. And big rally today, 1.5%.
You're high there on SPY.
In a big way still. Thanks, guys. Good context here for the session. Nita Young and Kevin Hanks.
I never really had a.
In Chicago, Zib Francis.
Never really had.
CIO at Convexitas. So
yeah, it's still not. Still hasn't had its pullback.
Markets are ripping. It's not just the Nasdaq. Is this really
it might not. I mean, it's possible. It doesn't have a retest or a pullback. It just kind of keeps going. Doesn't give people a chance to get in. That's kind of what it's looking like. Expect to pump tomorrow too.
There's such thing as an Ivy League.
Seems like this thing's probably going to keep pumping.
There's very good. You're disowning your own kind, Mr. Francis.
But yeah, I mean, I think
up through these levels. Could happen quick, like next week.
For a while, and this was a slow time coming, but the news at the inflection point, if you will, the Fed.
Not enough people have probably bought calls yet.
To be more flexible.
They got to keep pumping it.
If they foresee that themselves to have that opportunity to do so, rather than the known microphone of the last couple of years.
Holy crap!
Always, there's a long period of time where
post-COVID, he was the one, and literally he put the floor in the dollar. Post-COVID, I remember it because I referenced it over and over and over again as the floor for that dollar. It was such an important move because it heralded the big blowout in yields. Now today, I feel like it's maybe not ironic that the dollar's down as big as it is, because who then mans the hawkish helm there? Is it Kashkari? Because he's been vocal the last year with his big pivot.
Yeah, I wouldn't nominate him as the likely one to carry the torch of the Hawks, but I'd agree. Buller kind of moving on, probably reduces the balance that they've had for a little bit of time now, although I think all of them kind of prefer to lean on the side of easy money over the long term.
21% on the coin.
What's interesting year to date is the transition of 2022 into 2023. Everybody was hyper focused on interest rates in 2022. They wanted to maintain that focus. You retrain people to focus on the shiny object over here. They stay fixated on it. And thus far in 2023, they have been pretty fixated on rates and inflation, even though it's kind of a known story that they're going to be quiet. I mean, what is going to cause the 10-year Treasury to go to 6% or 2% in the near term? It was very unlikely. It's likely to be a range-bound interest rate market for the long end, which is what's feeding into equities, other assets. Assets have duration. And we've experienced that. It's been pretty boring. We've effectively been between 3.5 and 4.
It was almost not boring last week, though. Going into the employment report before CPI, we had one of the sharpest moves we've had all year for the 10-year. It ran straight up to that 4% and just U-turned here in the past 5 days. Was the information we got on employment and now CPI this week that big of a catalyst for that U-turn in the 10-year yield? I mean, we were about to set a new year-to-date high, push back to the 1-year high.
Yeah, I mean,
it's failed.
There's very much summer trading volumes of nothingness that allow you to move rates, 25, 30 basis points, and then all the way back to home base.
What about all that economic data that was way better than expectations? That's not why the 10-year yield was moving?
I mean, it takes a little bit less of valuable information to move things more significantly than they would otherwise in the summer. So I'd agree with you. You had a little bit of the ramp up. Okay, we had a little bit better data. We moved 25 basis points when you'd say in a winter, everybody sitting at their desk would move things 5, 10 basis points. And then because it was a light volume sell-off in treasuries, guess what? We're back to home base, as you've been describing, where we've been kind of since the start of May.
Yeah, okay. So now we settle into this 3.7 for the 10 years. So the volatility failed to break out, failed to cause major disruptions. But on the other hand, the credit risks have also failed to be disruptive so far. Do we have any major problems, or are we actually threading this needle to a soft landing?
Major problems, not yet. Do we have problems? Absolutely. Like I think about a year ago now, somebody that everybody knows said, prepare for a hurricane. And I think what they were looking at and talking about was credit.
Was it Diamond?
It was Diamond.
Okay.
They're talking about credit. But credit usually doesn't start with a hurricane. That's like, the ninth inning. That's the final stage. It's much more similar to like a tornado. It is targeted, extremely destructive, but it's picking things out kind of one by one. And you pile up enough of those incidences, that's what sets the stage for a potential broad-based economic hurricane. But what we're seeing so far is much more of those targeted hits, something much more similar to a tornado. And, you know, it just takes time. And that makes it difficult for the market to care. The market likes
it's up
action.
10%.
They like things on the calendar. Credit is a slow-moving beast. You see little, you know, bumps in the road, but there's no, you know, FOMC date or CPI date on the calendar that has known credit important information. So it becomes pretty easy for the market to say, oh, I'm worried about that, and then quickly let it run off. You
like
know,
it did
the
with
time
regional
frame.
banks.
Yeah, I mean, that lasted maybe 6 weeks, if that.
I think credit spreads came back down, though, because I would think, though, that as the hurricane or tornado builds, if we are trending in the direction of weakness or credit risk, why doesn't it show up in the credit spreads? Why didn't any of that risk remain visible in the credit
I still don't get why
spreads
Mullen's
since
borrow fee is so
the regional
low.
bank crisis? I mean, we've
It just
unwound
stayed
all
flat.
that. Bonds
Stayed
are
low.
telling us, basically, corporate bonds are telling us that things are better than they were right before the regional banks.
One of the easiest reasons why we've kind of tightened to year-to-date tights-ish in credit is there's just no new supply. You know, and generically, credit grows at about GDP plus 2%. That's nominal, not real GDP, nominal GDP plus 2%. I think that's probably what most folks' expectations are. You know, the economy's growing, they're able to issue more debt, and thus corporates go ahead and do so. But what took place in 2022 and thus far in 2023 is net issuance, debt rolling off, you know, plus, you know, new issuance has basically been flatlined. It's been zero. The amount of supply that's been entering the credit sphere the last almost 18 months is essentially zero, which is way under expectations. And so when you have a significant amount of reduced supply and nothing to necessarily fully disrupt demand, it allows prices to increase, i.e. spreads tighten much more easily.
Okay. So is there anything clear on the horizon that is going to stress? The thing that I keep thinking about is the information, the data we see on credit and, I should be specific, credit card indebtedness. To me, it seems like the consumer's already pretty strung out, but then you get analysts coming out and saying that the airline and travel industry still has another leg to go, which is like mind-boggling to me because it seems we're already paying record high prices for these high-ticket travel items. Then you get houses coming back, and it's like, where's all this money coming from if we had this period of tightening? Everybody's looking for these lagged effects, but there's these signs that we're like heating up again somehow.
Yeah, I mean, financing, i.e., you know, access to credit only matters if you need money. And so that's, you're focusing on the right thing. You should focus on any areas that potentially need money, need liquidity, because that would just cost a lot more to facilitate those financing needs if you actually need money. We're not at that anywhere close to that stage, probably in the corporate sphere. Corporates right now are not in need of additional capital, but I would agree, consumer is probably inching towards that way. And the question is, what's the lead lag time? When you know, purchase something on your credit card for, as an example, your summer vacation, are you gonna see that in December? Okay, we spent the money in June. You see everybody moving around, experiencing, you know, that event that they purchased in July, August, and then it falls off a cliff because you're basically pre-funding that experience that all the data's tracking. Like, I think there's probably a good bit of lead lag time, but I think you're focused on the right side of the house is when is a consumer actually becoming truly constrained where they're actually going to reduce their spending? I mean, what was it, the survey end of last week was expectations on how much you're going to spend in comparative to last year.
Yes, neg busting out again.
Said, which we could argue is maybe forward-looking. Are people actionable on that? We'll find out. But it was, we're going to spend 10% less than we did last year. So I think a lot of the drop-off, even though the data is saying you're accumulating more debt now, is in the future. Now, how far in the future? Probably more, 3-6 months rather than years for the consumer. But it's still a little bit off, giving us this runway right now that we're in the summer.
Is the jobs market strong enough to whittle down some of that consumer indebtedness? Because with inflation dropping now and employment being pretty strong, our real wage growth is, I think, getting past inflation, or at least on par with it at this point. Does that help us?
I mean, that's definitely the hope to get to the Goldilocks scenario, is that wage inflation, though slowing, can creep above what inflation is raising costs. What I always got to remember, though, is everybody in the comparative would say, okay, if there's 6% inflation and 6% wage increases, that means it's a wash. That's not a wash. There's something called taxes that is a friction on your wages. And even lower earners pay a significant amount in pseudo taxes, i.e. they don't have the money today. You know, that's whether it's Medicare, Social Security, state taxes. So everybody's paying kind of like 20%-ish as a floor out of their paycheck to someone else. So you actually need, you know, the wage inflation to be probably 50% higher than inflation to kind of tread water.
Interesting. So it seems like, because I want to make sure we talk about volatility for a second, what you do at convex stocks, but we only got about 90 seconds, is it sounds like your macro view generally is that still a 6-month horizon has potential for credit risk, but with the stock market doing what it's doing and vol dropping, how do we hedge for that, or what type of hedging should we be doing then that's not wasting money instead of chasing a rally?
Yeah, I mean, right now, implied volatility from absolute level is pretty darn low. Skew is really steep, meaning that puts are much more expensive relative to calls. The calendar is very steep, which basically means near-dated options are much more inexpensive from an implied volatility standpoint than longer-dated options. That is 100% a normalized volatility surface post-2008. So essentially, the vol surface is saying, everything is normal, fine, happy, keep on, carry on. And to be honest, it kind of makes sense considering the quarter we just had. The amount of realized volatility in Q2 was incredibly low. It was a little less than 12, so very, very boring. But additionally,
Never be available ever again. Maybe not.
Down 1% or more, and there was 0 days where the S&P moved up or down 2%.
So that's why
11% on Mullen.
Right. So you not only were you not moving much day to day, but you also didn't have any of the quote unquote extremes.
Or popping on barbecue, 30 cents.
On the downside of over 1%. So it makes sense that the market's kind of pricing in a reasonably vanilla path forward and a normalized path forward at this point in time after the experience we just had, making it, you know, potentially a little bit more interesting to utilize volatility as part of your portfolio. And again, how we like to look at things is essentially you have your current asset base, you don't want to disrupt the current asset base, you utilize volatility to create a negative correlated, positively convex allocation within the portfolio that essentially the goal of it is when the market goes down, it produces unencumbered cash for you to utilize, whether that's for, like, you know, your needs. If you're living off your assets, you know, you don't have to sell things during the downdraft to keep on, you know, servicing your lifestyle needs, or become an accumulator of additional assets during drawdowns. But right now, without a doubt, the volatility surface is saying this is a decent time to think about utilizing volatility strategies.
All right, like it said, Francis, thanks. A little mismatch between perhaps the credit risk still in the 6-month horizon and the market's comfort and complacency with volatility messaging right now. Zed Francis, Convexitas, a great combo. Thanks for the macro discussion here. Let's move it into the micro, and let's go to the banks. Obviously, a very key sector after being the major risk point earlier this year. Dick Beauvais rejoins us, financial strategist at Odeon Capital Group, a day after a positive note on Morgan Stanley. Dick, welcome back to the show. Thanks for being here. Let's talk first about Morgan. How come you targeted that stock in particular over the last couple days?
Well, basically, in the month of June, we saw a tremendous turnaround in the investment banking sector. In other words,
Nicola might be about to turn back up here.
12, 18 months
a little inverse head and shoulders in the 5 minutes.
We're seeing, you know, all sorts of difficulties developing there. People were not doing stock issues.
Probably only high of the day would be.
Positions had fallen off a cliff. You know,
highest I would take it.
The high yield market
might break that, but
effectively at all. And the bottom line was, you know, you start to see significant layoffs occurring, you know, bank after bank. I mean, Goldman Sachs, you know, kept announcing them. Morgan Stanley laid off people. And all of a sudden in June, you know, because the market was up so sharply from the low last October, you saw a bunch of equity offerings. You saw the high yield market turn around very aggressively. You saw mergers and acquisitions actually exploding. I think Morgan Stanley's merger and acquisition activity increased by over 100% in the quarter, but mainly in the month of June. So my guess is that all of the earnings estimates that we're seeing on both Morgan Stanley and Goldman Sachs are going to be too low, and that the companies are going to surprise with better earnings than expected.
Yeah, that was circulating like a week ago.
Impact their stocks.
How does
MC.
Morgan and the large bank cohort look to you ahead of this earnings in terms of their
For a retest a high of the day and maybe a breakout.
raise expectations? The shareholder-friendly stuff, the dividends, buybacks,
Let's
kind of
say
seems
here.
like one thing. What about the bottom line
Price targets.
and the revenue and profits, their outlook? What's the potential for them to ramp that up?
Well, you got four, if you will, segments that you're going to look at in banking this time around. For the biggest banks, you've got hundreds of billions of dollars, hundreds of billions, which have been put at the Federal Reserve and are getting 5%, right? I mean, that's a big amount of money coming from a sector where they were getting less than 1%. So the net effect is, I think that the big banks in the quarter will have, reasonable earnings. Okay, I wouldn't say great or bad earnings or terrific earnings, but the earnings at JP Morgan, at Bank of America should be reasonable. If you go down a link to the biggest regional banks, the biggest regional banks tend to lend money in the business sector. So they haven't really been hurt as badly as one might expect, in this period. And their problem was that company inventories have dropped, and therefore their lending has been weak. So I would expect their earnings, this would be a PNC, a U.S. Bancorp. I would expect companies like that to see flat to down earnings a little bit. Then you go to the next sector, which is the consumer sector. And what you're seeing there is a soaring in the revenue side of the business because people are borrowing a lot of money now to buy whatever it is they want. And they seem to want recreational products, tourism, things of that nature. But, what is going to be harmful for those companies, and this is Capital One or Ally Financial, is going to be this big increase in loan losses. Auto prices, used auto prices have come down. People are actually upside down on their car loans at the present time, and therefore the consumer banks are ones that you want to watch out for and stay away from. And then that fourth sector is the smaller banks, which people are now calling regional banks, but used to be called community banks. Their problem is holding on to their deposits. If they can hold on to their deposits, and now we're talking about companies like Bank of Hawaii, PacWest, Western Alliance. If they can hold on to their deposits, then, they can stay alive. But the cost of holding on to those deposits is going to be 5.25%, which means that those banks are going to have very weak earnings and are going to be very troublesome, in the quarter.
Okay. So sounds like we're not out of the woods yet in the lending heavy, kind of more regional style banks. What about the IPO, the capital markets?
The first price target.
Volatility stays low, stocks keep rallying.
Nicola.
Might we get a little surprise on that part of the balance sheet from the banks involved in that sector?
Yeah, well, that's the reason we recommended Morgan Stanley and Goldman Sachs. The reason is because, we are getting a big surprise in that sector of the balance sheet. We are seeing, although it's not in their balance sheet because they don't own the loans that or the equities that they issue, they just make money off of it. But the point is, it's turned around. It's turned around aggressively, dramatically. And there are
Mentally
four
trade it,
companies
Cameron.
that specifically benefit from it: Morgan Stanley, Goldman Sachs,
Train your
JP
mind.
Morgan, Bank of America, and to a lesser degree, but in there is Citigroup. So those companies will see that portion of their income statement doing extremely well in the quarter.
Okay. Dick, always a pleasure to get your analysis. Thanks for the update on Morgan in particular and the group as a whole going into earnings. Appreciate it.
It's a small move. The risk for reward isn't big there.
Capital Group, busy man.
5% maybe.
Let's trade
Oh, it was.
options. Going back to the travel.
I mean, it could go more, but
Delta
this is
down.
where you should be taking profits.
But that's all right when you got
Oh,
Alphabet
not much
Big
missed.
Tech working, Nasdaq's higher. Checking in on Alcoa as well.
Did better on short term. It's all the same. High of the day on SPY there. Looks like that first price target was the one. A melty melt up on SPY. Voice boy. Bitcoin. Yeah, that's huge news. On the XRP lawsuit. One overheated. It's staring at charts. Yep. Coin high a day. Moved. Where'd my other line go? I had a line right here. Didn't see pop, huh? A little bit of Grumpkin, 1.5%. Pop on GME. SPY is also at the 52-week high. Kala. Popcorn's on Reg Show. Did you learn your lesson with Reg Show?
You're starting to see a little bit of perk up in some of these commodity prices. Wolf Research yesterday, or just earlier this week, downgraded the stock, put a $25 price target on it. They got a neutral rating on it. Concerns about the health of the global economy have been an overhang on base metals, pressuring prices in recent weeks. So that's a concern moving forward. But we did see some unusual
broke out today
in there, and I think this is an earnings-based play because they position themselves in the July 21st monthly cycle that expires in just 8 days.
Big move on Wolf.
So capture that earnings event on the 19th.
Broke out of that level.
9,000 of the July 37 strike calls for an average debit of $1.34. So that break even at 38.34 over the next 8 days. About 5% above the current share price in there. with the option market pricing in about a plus or minus 6.5% move in the shares.
Yeah, Snail is up a lot,
definitely that
26%.
break-even is within that 1 standard deviation move that the option market's pricing in. Call volume about 2.5 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, taking an earnings play, I think, on this one.
All right, ahead of tomorrow, right?
No,
Alcoa?
the 19th.
So Alcoa's bankrupt?
Next week.
Oh.
Yeah, you'll capture earnings.
Really?
Will, with this, but that's what I think they're positioning for. I think that's why you're seeing a pickup in call volume. You know, maybe areas that have been beaten down have been weak with this 16% rally in the S&P 500 this year. Maybe this it might be an outlier on earnings, and I think that's what this trader's playing for.
Well, dollar breaking down, we got commodities rallying. That should be good for Alcoa, generally better prices.
Yeah.
Okay, Alphabet.
Yeah.
Google. Nice commentary this morning from an analyst, and I mean it's rallying really big, 4.5%. Not quite breaking out the way Nvidia is doing, but it looks like it's right behind.
I think the concern here, and the concern has been so far over the last 6 months, is as AI and ChatGPT has become, you know, those bellwether words that everybody's hanging their hat on at this point, that, hey, search is going to lose.
Look at the VWAP on SPY today.
Is going to
what
lose
trash,
market,
man.
right? They're not. The data's reflected.
Look at this.
I use Bing now.
Yeah.
Because it's my default browser.
Oh boy, why do you?
Well, because the Microsoft computers now, they crash Google Chrome.
You can put Chrome in there. It usually works.
Okay.
New high of the day on SPY. VWAP has not been playing all day.
No way around it. Still does.
A lot of people don't like it. Yeah.
No, it's just. I mean, it sucks.
Yeah, but
still,
digital ad spend has not pulled back like a lot of people thought. Right.
Yeah.
My favorite game.
Google is still the winner in this. Search data has metrics have resonated with the fact that Bing's not taking any market share away from Google Alphabet, and ChatGPT. Metrics for that in June were down nearly 6%. So Google Alphabet maybe not too concerned
All right,
here.
Nicola maybe breaking
just
that
making some changes to their bar
that level.
AI.
Next,
so they're making some inroads on the
price
AI
target
side of it
2250
also to implement into their search, but definitely not losing any market share, and digital ad spend remains robust. And we saw some call buyers in here with the stock up over 4% today, and this was out in the July monthly series also, 8 days to expiration, so really short-term positioning. Over 30,000 of the 125 strike calls were scooped up. Average debit of about $1.40 on those throughout the session. Break even of 126.40 over the next week. That's only about 1.5% above the current share price in there. With call volume, over 400,000 calls have traded on the day, Oliver. And this is a heavily traded stock on a daily basis as far as option volume. That's still 2.5 times normal daily average volume, but you'd expect that with the stock
450 on SPY.
As far as the Elite 8.
Congratulations.
The Elite 8.
Yearly high.
Okay, I'm into that.
Yeah.
Just doing a little test of the Google versus Bing search, and yeah, it needs some work.
High squeezing.
Sure. I've also noticed that they're now like putting in a little like blurbs on different sites and stuff of like where the AI is like offering, you know, a take, and I don't know, it's hit or miss at best so far. There seems to be a lot of really, I mean, ChatGPT is ridiculous, the stuff that it can do, no question about it.
Right.
But like how they're implementing it so far,
Almost
I feel like this
1%
idea
on
that
SPY.
It's going to be somehow displaced is just insane. I just think it's insane.
ChatGPT and a lot of these
452.14 I think is next.
Are in the first, second inning. I mean,
yeah, they're not going to give any retests.
Right in the mix with their own bar.
No surrender.
So how bad can it be? All right, thanks, Tom. Interesting bullish trades.
Hopeful for today to get a nice long entry, but
now we get
first swing, but never happened. Never filled gaps or even tested support.
20%.
Crazy.
Bitcoin finally joining in after being glued at 30,000. It's trying to break free with a 5.5% rally. Jenny's got the story.
Wish is up 10.5. Nag. Birds. Nag's now consolidating up here too. Below that 1.4. Rip your puts, indeed. 24% on coin. APDN 13%. 15 minutes to close. New high of the year on SPY. If Teladoc can break out, maybe next week. Zoom is looking like it might. Alright, I'm gonna short some calls on neg to make this play free. That's a pretty big spread. Should have done it earlier. I wasn't planning on doing it, but probably smart. Late date Jenny. Jenny told me to run, so I ran.
Victory, I do want to say with a disclaimer, we did get news that a U.S. federal judge has partially sided with Ripple
SPY is
Labs in an
freaking
SEC
squeezing.
lawsuit, alleging the
Holy
blockchain
crap.
developer issued an unregistered security offering with its XRP token, giving both sides something to celebrate, according to the report. Now, Ripple's institutional sales of XRP were found to constitute an unregistered securities offering, but
Look at it.
sales on the secondary market
It's ended up being a
were
pretty big
not,
day.
according to this report. Now, the judge concluded that the SEC
Amongst
need
all
not
the chop,
demonstrate that
finally
Ripple's
started breaking
co-founder
out.
Chris Larson and CEO Brad Garlinghouse were aware that Ripple's transactions and schemes were illegal. So therefore, a reasonable juror could find that Larson and Garlinghouse did not know or recklessly disregard Ripple's Section 5 violations. Now, obviously, we are seeing some of these
15
names
minutes
take
to go.
off today. I think Coinbase is being deemed the biggest
Favorite meme
beneficiary
stock
of
is
this
ripping.
news because they're fighting their own
Let's
SEC
buy.
lawsuit that did recently charge
Barbecue's
the
at
company
30
with operating
cents,
its own unregistered
up
national
1%.
securities exchange, as well as illegally selling various tokens. And the SEC lawsuit, I read some of the brief about it. It's fascinating the way they allege that they were not actually being mindful of some of their customers and those that were trading on their platform. It's pretty negative, especially if you were one that was exposed yourself to, of course, Coinbase's platform. But this is also still only a partial victory for Ripple, as they do.
Dang,
We do
I
know
bet I
that
could have gotten
retail
filled on
sales
that
can
pump
bode
right
well
there.
for now Coinbase at this point with its own regulatory challenges. But I think that the regulatory landscape in this entire space still remains fairly uncertain, and that sort of volatility is something that you have to be mindful of. I mean, you see these names.
Oh, there
Coinbase
were
is up
some that went for
202%
15 cents.
year to date. MicroStrategy's up 226% year to date, and those are actually the
Would've been
smallest
nice.
moves on a year to date basis. Marathon Digital's up 466%
Well,
year to date.
I think
and
Nick's got some more
Riot
room
Platforms,
for
which we
sure.
discussed
The first day of a
earlier,
pump.
is up 502% year to date. These moves have been phenomenal, and the green candles we've seen just in the last several weeks have been really notable. I almost thought I was looking at an error when I was looking at the chart, but again, I always think with the Bitcoin area, what goes up can sometimes very quickly, of course, come down.
It's
Coinbase 24%.
funny, but kind of standard in crypto where you go with whatever the most bullish narrative is. After years of
There's
ridicule
Nicola.
of the
All right, next
mainstream
price target right here,
community on
22.50.
Ripple. I mean, it's like if you pull any coiner crypto fan
Setting your
off the
stops
web,
for
there's a
22,
huge division
22.1,
the Ripple stands
221.
and everyone else who's basically anti-XRP
Oh,
Ripple.
you hit your
for
price target
years,
right there.
just ridiculing that particular asset, and now today, it's the savior. So make of it what you will, I guess.
Don't you feel like the Ripple enthusiasts, though, were like the loudest voices across
10 minutes
social
of
media?
Fugazi
Those that
coming up.
love
I don't know,
Ripple,
they're all pretty loud.
You knew, yeah, that's true. They are all pretty loud. But you knew someone was supporting Ripple because they would talk about it nonstop.
Oh, yeah, I know. All right, well, here we go. Exponential moves in the classics. Marathon, MicroStrategy, Coin, and Riot. Ripping. Thanks, Jenny. A nice setup for us to talk about Bitcoin and more with Mr. Bob Iacchino, founder and chief strategist at Path Trading Partners. Bitcoin's back, Bob. Bullard's gone. The dollar's gone down. Is this an environment a bear can survive?
2.25, breaks 2.4. Yeah, I don't have any more. I haven't charted anything above that. Oh, I guess 28 cents.
The whole Bitcoin story, I mean, it's funny listening to Jenny.
I don't think it's happening today.
Put that story together and talk about how, you know, you have to be mindful of what goes on in these particular assets. I mean, I think that's spot on. As long as you see this kind of volatility, you know that these kinds of moves will at least reverse in part. And people won't have that kind of staying power, especially because of the bear market that crypto has just gone through. Now, I actually did something unusual, and you've known me quite a while. Normally, if I start to feel bullish something, I buy the actual thing, right? But we recommended Iris Energy, which is a Bitcoin miner, on about April 18th. So I've been pretty happy with that trade. We're looking for kind of a double on it. It was trading somewhere around $4, and it's somewhere around $8 now. And when I look at that versus a Coinbase, which is right in sort of the crosshairs of the SEC, Coinbase and the like, you're talking about, since about that April 18 point, about 78% in Coinbase and about 98% in Iris Energy, ticker symbol's IREN. Now, I'm not recommending anyone buy it now. We're almost getting ready to get out of it. So it's certainly not a recommendation. But when we sent that out, it was in part because of this idea that some of the crypto sort of bad actors were starting to get called out and pushed out. Now, who would that benefit? Probably miners, right? When you're looking at the core case of Bitcoin specifically, and you're talking about the supply just dwindling and dwindling and dwindling, who was likely to benefit from the sort of survival case of these assets? And we thought it would be the miners. And then that was one of the better chart patterns that we found was Iris Energy. So looking at it from that perspective, I mean, talking about having a target in Bitcoin right now, I'll give you a quick setup here. If we get a close Friday above 30,500, then my target's going to be, what did I have? 36,000. So that's kind of what I'm looking at with crypto now, is these sort of, what in any other asset would seem like an insane target. These sort of targets that are very reachable in the crypto space, and then kind of a pause and wait and see from there, rather than just
Thanks,
sort of
Ace.
buy and hold.
Appreciate it, man. Thanks for the support today.
Jenny made. Right now, you got gold a little changed on the day, as gold has been generally trending higher. But as this market really starts to reprice rates over the last week, it seems like that's the type of environment where crypto can shine. Today's move pretty big, but we did have a couple days there where Bitcoin was still kind of stuck, and gold was trying to move. I'm wondering what you think about in that trade-off right now, is kind of some of those more wild card assets. Like, where do they fit in if we are going to soft land? Inflation's going to come down, because isn't like one of the big Bitcoin theses that inflation's going to cripple society? Like, isn't that why markets are rallying? Because that's not going to happen with inflation?
I mean, when I look at those two, Oliver, I guess the best way I can look at it is buying like a Captain America sport bike, or buying like, you know, an Alfa Romeo convertible. They're just two completely different things, even though they react to some of the same things, right?
What's a Captain America sport bike?
An insanely fast motorcycle can take you to the same place that an Alfa Romeo 124 Spider could. They're completely different.
You got a very specific car in mind, Bob. You going shopping?
It's a very Italian car.
Yeah, those 124s are sick little cars.
Swedish, but I'm very Italian. So from that perspective, when you compare those two things, I think there has to be an understanding of what return profiles look like. And it's always been more important to me to protect capital and make gains than just make gains. And there's something I think we do really poorly in financial media, is we cover things that go up a lot, as opposed to covering things that go up a decent amount versus their risk profile. You know, I've been in gold all year. You know, it's been kind of my trade of the year. It was based on a recession and the subsequent lower rates that come with it. And That to me is still playing out, and you just aren't going to get crushed in gold like you could in Bitcoin if the whole narrative breaks down. So that's part of the reason that I made that sort of comparison as to what the two investments are like. To me, they're two.
All right, and so far the gold trade's been working out pretty well. Thanks, Bob. Always like the thoughts here and timely discussion. As we head into the closing bell, stocks are strong. We'll continue the conversation around the big.
Yeah, I think the CPI definitely turned around sentiment in the market. There was just a lot of concern that we wouldn't get softer numbers or indications of disinflation actually confirmed. But, the numbers were good. You can't poke a lot of holes at the CPI number. We are seeing, starting to see those sequential month-to-month declines, particularly in the core number. We think some more are coming, especially with the rent component on the way. So I think the bonds just are holding in a rally here, in a range here, waiting to see how the Fed interprets the data.
Might lose some power here.
Second rate hike, which was not
Full head and shoulders are on the 5-minute on SPY.
priced in. And now we're looking at the market going back to the idea of cuts.
Get a little breakdown here into close.
So
5-minute finger slap.
Around here, but again, we think the high was in last fall, 10-year yields, and that the ultimate path of least resistance is lower.
They're all hanging out at the highs there.
Push over the last week.
Very strong at a close.
So we were so close to making a year-to-date high, which would be close to that high that you mentioned from last year. The
Nicola might keep going.
How do we kind of explain that?
Could be an after-hours mover.
That numbers overall for the economy were beating, so maybe inflation would beat and then it doesn't, so then we totally go the other way? Or what was really the key piece of information here?
Well, I think it was the big turnaround went from the ADP to the jobs report, right? So we tested that 408, 409 level a couple of times, but when ADP came out strong,
2 minutes.
Higher, on expectations of strong labor market data, we didn't get it, and that really had set the stage then for the soft CPI number. So we've been again bouncing around here, but ultimately
300%. I think eyebrow would probably be like 200. I don't know what the other ones will be.
Or we'll maybe get one more rate hike later this month, but the
Omaha
bulk,
Steaks.
the bulk of the rate hikes is behind us. The cycle is turning, and that favors extending duration and being a little bit longer on the yield curve.
All right, and
I like that. I have nickels for that purpose.
Observation that ADP to employment kind of gap there that really got the wheels turning for bulls in the bond market. As yields drop and play a role in this, Lizanne, how much of a risk is
like Omaha Steaks, so that's a good one.
Again, or are we just going to see big numbers from earnings and tech companies like NVIDIA gave last quarter to justify it all?
So I think that's certainly the hope that second quarter ends up looking like first quarter, where analysts set the bar low, companies exceed those expectations.
Egg popping up during the close.
You get a sense that maybe the trough in earnings is behind us. I think it's premature to suggest that because you've got top line growth that's gone from strong territory in terms of
still trying to get these short calls filled.
That was mostly tied
Maybe someone will hit the ask at close.
You have no real revenue growth. You're in negative territory. And I think what's really important to focus on with second quarter earnings is not so much earnings, the beat rate, but that revenue nominal versus real, what it means for profit margins. And given that nominal revenues tends to be highly correlated with various labor market conditions, getting a sense from companies whether if they are experiencing some profit margins, whether they want to try to protect it on the labor side of things. So I think this earnings season is really important, but more than just the traditional metrics of beat rate and ultimately what the percentage change is, but those other factors
Give me the fill.
will frame the
Nobody?
macro environment,
Nobody wants it?
helpfully as well.
All right, there's the silent bell. Silent but deadly.
James Bullard affect that framework for the macro?
I did open up a short on the futures there with that head and shoulders and a break of this trend. So probably close it back out. I don't know. I don't know if I'll hold this past 5 or not. I'll probably close it before 5. Futures markets close at 5. We open back up at 6. So if you hold over that period of time, though, you pay more, I think, in margin, and it of course messes with your margin on your brokerage account if you're splitting it.
Maybe makes a difference going.
So that's why I usually close before 5. Sometimes I'll hold overnight.
Okay.
Yeah. Neg was the only one that really woke up for me today. Still waiting on Teladoc's not bad though. What? It did 4%, huh?
Well,
started rallying into close. It's still kind of in a range though. Need to break out of that high. Nikola, big mover today. Might see a pre-market move on this thing. I don't know. That was really strong into close. Rad's up 3.5. Wow, when did that happen? A little sketched out about Rad, but there's. I think it still looks good. I just makes me a little nervous, that tweet about it being BK.
At the top,
I think lift will be good. I averaged into that yesterday. Hopefully I have enough time. Not too far out of the money. 13s for August. I did get back into Beyond today.
Thank you very much, team.
I think this thing looks nice. I paid about 150% what I did when I bought the first calls back here, but I have more time now and a little further out of the money, so I'm 19s for August on that one too.
Almost won the Dow, at least positive.
Yeah, didn't do very well in the futures today. I don't know why.
gander at a big
Bad entries mostly I'd attribute it to. Just late on entries or entering when I shouldn't have entered. I forgot to review my trades before the bell, which I'm gonna try to remember tomorrow and review today's trades to come in with a fresh idea to not make the same mistakes. Market's looking frothy though. It's probably decided, I'd say, today. It killed that RSI divergence today. There's still this one, but yeah, I don't know. Seems like it's going to keep going up for now. Could come down to retest, which it's not. I guess it's not surprising that it didn't give people the opportunity to go long. Just gapped and went, chopped through, killed premium, and then did its move. So might just have a couple big days, as you see on the SPY when it starts to, once it's broken a level, like here. Once it broke this high here, came up. This one actually did retest. Came up, retested. There's a nice entry, and then big day, gap, big day. Just a couple big days and gaps, and then all of a sudden you're much higher. It consolidated, and then again broke that level. 4 big days with gaps. So I think that might be coming here soon, putting us back up to 458, 460. Could happen quick. 468 even. There's nothing that's going to bring the market down. It's going to go up. And CPI was beat expectations, and not a whole lot on the horizon to kill the market, unless there's a black swan or, you know, some event. So look for the longs. It's gonna happen quick though when they hit that top. Gotta be scaling out. Falling up 10% today. 1.5 after hours. Not bad. No one is fired. Rookie move. Thanks guys, thanks for the support. Thanks Guts. Thanks Seaman. Thanks Cameron. Thanks Trays. Thank you Ace for the support today, the memberships. We've got few gifted memberships from you today, I appreciate it. 44 likes on the stream, guys, appreciate that. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. See you in the after hours. See you on the socials. Peace out.